the rest of Europe basically doesn't care. The Danes care because obviously they see it as part of their country. But Germany, France, Britain, ultimately, they don't really care. They're not going to really go out of their way to defend Denmark and Greenland.
All right, well, I guess I'll start without anybody showing up. I know it's Football Friday or something, Football Sunday.
He's absolutely determined to
just get this set up. I don't expect to be on very long, but I just wanted to go over a couple of things. Primarily from, let's turn this guy off.
In some kind of compromise where Greenland remains under Danish sovereignty, but the United States.
They don't want to meet in the middle. All right. There currently are 17,210,397 shares of Railtown. This is too precise for school, but anyway, looks like we have 17 million in our little orbit, which is really good on you guys' part. I will, in case somebody joins, I will take further points here of where we are, how many shares. Hey, Ward, and hey, user, how are you? There was a guy yesterday, Ward, or sorry, Friday, and his name was, oh gosh, I can't remember exactly his name, but he was, his basic question, I think he was, I don't know if he was sincere or one of the other side, but it doesn't matter. His basic question was pretty good, which is about competition and how intense the struggle's going to be, and fierce. I think fierce is the word he used. So anyway, I asked Perplexity about it, and there's some answers there. But I just have a couple of comments first. One is if you're trading in these kind of stock, not Railtown, but all these other kinds of stocks, the odds are being negative is exactly going to win out at the end of the day. It's just exactly the position to take. Everything from ZJYL to G-Bucks to even now it looks like Finger's going to have to raise money at a precipitously low price unless there's a miracle. So negativity is self-fulfilling, and it's the best prediction in all of this landscape of companies under $5 who need capital in the North American public markets. So it's a pretty, if you were a betting person and you stepped up to a crap table where, 95% of the time over the course of the game, betting pass or fail instead of it's going to work, you would win 95% of the time. You're going to look like a genius, and you're going to look like you're really a talented seer, and that you have great skill in advising people on investments. So that's one thing. It's the best overall bet when you don't know anything is just to go negative, say it's not going to work. And odds are you're going to be right. Of course, they give themselves very long, these bashers give themselves very long timelines. They don't, if it goes against them for a couple of weeks or a month, they don't come on and say, well, I was wrong on my timing. They just always take the credit. But anyway, the other thing is the quote I gave you. It sounds good when someone's past, oh God, that guy's really looking out for me. Well, I just want to emphasize that we're in a rapidly evolving space with AI. In fact, it's so rapidly evolving, people don't even understand the terminology. Uh, uh, Investors don't quite understand it. They're trying to figure out who's going to succeed and all that. So again, there's risk in backing the wrong horse. Who can ever forget the race between Betamax and VHS? And then the whole category got obliterated by streaming. That's the nature of the beast. My contention is with Railtown, although we do want it to be proven, but my contention with Railtown is they got an early start. They have battle tested and built out their software, or whatever it's called now. It's probably not called software. But that doesn't necessarily mean that they're immune to a better mousetrap coming along. However, I think it's a jump start. Even a company like Langchain, who started, I guess, at the end of 22. So that's basically 2.5, 3 years. But Langchain is still in the middle. They're saying what they are and then filling in with the money they raised. Obviously, the guy had a brilliant idea of putting data in chains. Okay. And developers like it, but he has no advantages over Railtown in terms of the same risk of obsolescence or the next great idea, or somebody else coming up with the capital and the room full of engineers that create the new paradigm. They don't have, it's a brave new world out there in that sense. However, I think that Railtown did get started early, did see the problem that they're addressing, which is slightly, I don't know if slightly is the word. It is different than Langchain's target. And we've talked about that from the beginning. I think you can break it down to horizontal versus vertical. But let's see what Perplexity said here in a minute. And then I think 2 or 3 other things stand out, maybe by chance. It could just be by chance. But hey, serendipity isn't just an island full of beautiful naked women. Serendipity happens in Serendip. Serendipity happens in the world too. And I'd say, I'm just trying to put it in priority. I guess I'll just throw the 2 or 3 things out. I can't prioritize it. But one is that unlike all of its competition, and it's not provable right now, so it's a leap of faith, I know. But based on their alignment, their ready-to-go-ness, and their alignment with TELUS, but also they have a smaller proof case with Uniserve, they're going to have revenue, particularly when they went out and bought AIP. They bought that spending. They don't own the companies, they own the network. But they bought that hyperscale spending by that group, and they're going to move it to TELUS. So I think it's pretty unique. And it doesn't matter. The market's so big, it doesn't have to be totally unique. But Railtown is going to revenue, and that revenue is going to grow, and it could grow like a reverse ski slope once it starts. So I think that's the difference. We'll see if it matters to the market. The second thing is this sovereign AI Canada trend. They're not the only country. Korea's doing it. I'm sure China's doing it. I'm sure the Russians will do it. And I think Saudi Arabia is doing, everyone's keen on sovereignty. They don't want the CIA or the United States government controlling data. Unless our government's run by women, then it'll be okay to do it because, ends justifies the means. Whatever to fill out the narrative. Hopefully we don't get there, but we'll see what happens when AOC gets in charge. That's going to be a lot of power. And it's not just that she's an ideologue, it's that she's a she. But we'll find out. I don't want to get into that argument. So I think the fact that Canada is roughly the 11th largest economy in the world, its sovereign AI campaign, along with bountiful energy, could place Canada in one of the top pole positions, I guess, one of two or three leaders in the AI world. Railtown's right there. And so the moat, they call it moats now. I used to call it barriers to entry, or the simplistic question, what's the competition? I always ask that. Well, there is a bit of a barrier to entry as far as Canada's concerned, as long as the sovereignty of data is relevant. And Railtown's right there. So I think that's a big deal. Railtown also is not, I'm not sure anybody has all the vocabulary, but I don't really have the vocabulary in this technology. But Railtown is designed, at least that's how it used to be described. I don't know if they've shifted a bit, but it's designed to provide development software tools vertically. So in other words, you go into an enterprise and all that data in the enterprise, it can be in the cloud or it can be in a local data system, but the queries and the models and all that are deep into that enterprise or that industry maybe, but it's not up throughout the internet like some of the other tools out there, which is a big market. I'm not disparaging any market, but it does seem like Railtown's target is more specific. And I guess I'll just throw on there my wild card to the upside is if Railtown really does have something that becomes, for lack of a better word, the interface or the top layer of user Railtown language models, whether they're large or small, then into the compute power. If they're onto something, and I don't see any reason why a big company couldn't just put huge resources, kind of like a Manhattan Project, to replicate what Railtown has. So I think that's a risk. But my argument is, and I've seen it a lot in the oil and gas industry and the mining industries, the big boys and girls, it always perplexed me. Why didn't they discover that they could drill underneath the deep and then horizontally underneath the Dallas Fort Worth airport? Why did they let Murphy Oil figure out fracking? Why didn't they do it themselves? Well, a lot of it just, every paradigm you have, every situation you're in, whether it's the use of your time or the use of your financial resources or the use of your team, follows the Pareto optimal curve. You're going to get 80% of your results focusing on 20%, of the clients, or 20% pick the top targets, and you let the others sort it out. And what the numbers are so big. The shale drilling boom. I funded a project that actually it was very profitable. Investors more than doubled their money in 9 months, 11 months. But as the risk was, we were on the eastern side of this structure, trying to test the theory that what went on the western side throughout a whole state would work on the other side, and everybody was there. It was a huge play, and there were some successes, but I don't know if it's because Kansas burned off all of its natural gas 100 years ago. When they found oil, they just burned it into the sky, or what other reasons. But anyway, we were able to, I don't know, I forget what it was, make 120%, 130% on our money in about 10 months. But then as they kept drilling, the results petered off. And so it wasn't like a home run in that sense. But by that time, somebody else is drilling all the wells. And if it worked, it would have been wonderful, but you've doubled your money. But anyway, sitting down with one of the guys that designed it, I asked the question that you and I are posing about Railtown. Why doesn't Microsoft just do this themselves? Or why doesn't, and they can as they start seeing what's necessary. On the other hand, I forget what we paid for acreage. We paid, I don't know, we paid $40 an acre, $50, $20. We got out there early. I mean, I wasn't out on the ground. The landmen got out there. But I think they then sold it. I could be wrong. We might have paid $100 or $200 an acre on average, but then they sold it for $550 or $600 an acre, and then you chop out all the fees. But I said, why don't these guys just go do this themselves? And sure enough, when you put it in a spreadsheet, whether they pay 200 an acre, 1,000 an acre, or 10,000 or 20,000 an acre, if the results are there, the revenue's there, it has very little effect on the long-term value of the asset to the bigger player. To us, to we minnows, it does. It's a huge difference. But anyway, one of my contentions is I think Microsoft, that's my favorite. You'll see here that IBM popped up, and that makes me wonder about IBM. But I think that it's easier for Microsoft to buy Railtown and then start from there if they want to change things. But it's far better use of Microsoft's time, although they have, it feels like unlimited resources. They'd have limited resources. Unlimited people, they have limited people. So it's a better use of those people and resources just to buy Railtown. And so I'll finish with this opening bit. That guy, the marshy slitherer, I can't remember his name. His concerns are all of the reasons why I think Railtown will sell itself and not try to be a unicorn. And all of the arms race going on between the 8 or 9 companies that want to prevail here, I think that's going to cause them to want to buy Railtown first. Railtown won't be the only thing they buy. They'll try to buy everything they can. And their currency is their own stock. And their stock is, I don't know. I don't know if it's cheap or not on future metrics. We'll only be able to figure that out in the future. But by every measure historically, these are expensive stocks. So you spend your stock to buy the shares. And that you've never seen this in these low price stocks. You've never seen it. Microsoft has real price discovery, and they have currency in their shares. GTII had no real currency. Let's not get buried in those old stories. All right, let me show you what I have. Hey, Jim. Hey, Jim. Yeah, you're right. And hi, Steve. And Krypton. The financial climate is obviously risky right now. All right, what does that mean? What does that mean? Has there ever been a time in history where the financial climate is not risky? I don't know what those statements are meant. I really don't. They're just trying to get the reader into the fear mode, and it's a meaningless statement. There's always been risk in financial markets, always. Now, during the heart of manias or the heart of trends, people can take comfort. It's like the British call them zebras. And when the zebras cross the Nile, and there's crocodiles everywhere and other hidden dangers, the zebras can cross together and they feel like, hey, it feels pretty safe. But it's no safer. It's safer to be a bunch. But for one individual, I guess the distraction of another zebra makes it a little safer for you. But zebras are going to be killed as they go across. And once you get across, you say, oh, well, that was safer than other times. It's an idiotic opening to your sentence, respectfully. There will be a shift where investment opportunities. What the hell does that mean? Every bloody thing ever shown to anybody is an opportunity. It's another, don't write your sentences this way. From large companies purchasing new technologies and smaller, oh, I see what you're meaning. And you're talking more about large companies. Look, if I understand what you're trying to say, this is my point. Whether Railtown has the most excellent, which excellence is a absolute, I guess, or nearly an absolute. But if they have something that's beyond anyone else's, or if they don't, I think the big companies are going to buy everything that's out there. And there's not very many public companies to buy either, which goes against us in some ways, because when you buy a private company, you can cook the not so much cook the books, but you can cook the story and tell your own narrative. But anyway, I wasn't trying to be hard on you. It's not a very precise way of presenting it, and I'm not always precise myself. All right, here we go. I wasn't going to come on today, but then it's just so hard to keep up with all this information. Which is good. We can learn, we can prepare. The waiting allows us to prepare. Oh, I got too many. So what did I do? 1, 2, 3, 4, 5, 6, 7. So 1, 2, 3, 4, 5, 6, 7. All right. I saw this on, I think this was on Corey Brandolini's, on Corey's LinkedIn. I forget where, but I think that's where it is. NVIDIA's papers confirm better orchestration. That's what that's Conductor. It's one of the 3 things Railtown does. Now others do it. And LangChain has one orchestration item, which apparently doesn't measure up, but I'm sure they can make it better. So nothing is static here. But better orchestration agents lead to cost efficient. If you're going to spend tens of billions, 20s of billions to build data centers, and then you're going to have customers come in to pay you to use them, you're going to want this efficiency. That's a value to the customer. All right, and then this is small language models are the future of agentic AI. And I've seen this elsewhere too. But apparently, if Corey did put this out, apparently Railtown can work with small language models as well. Small models are the future of agents when acting as efficient controllers to coordinate and route tool usage effectively. As routers, large logic controllers, not knowledge bases, efficient control, low cost. And then you can find this on his LinkedIn. And then the orchestra, that's what Conductor is about, orchestra, tool orchestra, efficient model and tool orchestration. And this is something that Railtown does. Now, does NVIDIA want to buy it? I don't know. We'll find out. I'm going to show you this again, and then I'm going to take it down because I need the space. The three products that Railtown currently offers, Conductor, my understanding, took 2 years to build, or maybe longer, but 2 years is what I remember. Rail Engine took 2.5 years, and both were a heavy lift. Now, NVIDIA could blow them away with 5,000 engineers. On the other hand, NVIDIA could just buy them and then improve on it from there. So we'll see what eventualizes. I don't know. Rail tracks might have been what they were doing from the start. But these are the three products. They build, feed, and observe the agent. And I'm just going to take that down for the space. And then I'm going to... All right, here's the question. I used Ward's perplexity, but I asked the question here. I'll read it out. Compare Railtown AI technologies and LangChain technologies and competitors, including Google ADK, but also look at smaller companies. Are there barriers to entry? Can competition make Railtown's technology obsolete? How big is the addressable market? If Railtown is a component interface with data centers, are the others also doing it? How big is such a data? I can't read the rest of what I should have shown more text. Anyway, here's the answer. Answers. Railtown AI and LangChain both sit in the emerging quote unquote agent / orchestration layer. So they're the ADKs and the orchestration frameworks, agent and orchestration layer of the AI stack. But they have different products, different centers of gravity, go-to markets, and competitive exposures. Railtown's risk of obsolescence is real, and we have to acknowledge that. That's why I think they'll be bought out, but manageable. If Railtown executes tightly around developer productivity and sovereign data center partnerships. I didn't ask about sovereign data centers up here, by the way. So Perplexity came up with this on her own some. Product positioning and competitors. Railtown AI positions as an application general intelligence / agentic framework for software teams, root cause analysis, error detection, developer assist, dev assist, progress reports, and observability over agents and code. Focus is narrow but deep. Increasing engineering velocity, automating tickets / release notes, and monitoring AI agents and code executions. Partnerships and merger and acquisition around sovereign AI infrastructure, AIP, TELUS Sovereign AI Factory, explicitly tie Railtown to secure in-country compute and marketplaces of Canadian AI workloads. And I think that's a jumpstart in proving concept, a jumpstart in generating revenue, and it's a bit of a ring fence that keeps competition limited. All right, here's LangChain. LangChain positions as a general purpose agent engineering platform with LangChain framework, LangGraph, multi-agent runtime graph, and LangSmith observability and evaluation targeting global developers and enterprises. Imagine for a second if Railtown proves out on top of data centers and then goes worldwide. They automatically claim a lot of that space as people, developers and enterprises use either AI companies or directly use AI companies who run their product off data centers, or these enterprises and developers go to the data center themselves. It's an interesting, everybody's going after the same thing, but there's a lot of space. All right, LangChain competes against other horizontal orchestration stacks. Llama Index, the Llama un quadruped, Haystack, Semantic, Kernel, and private frameworks. And then LangChain also competes against infrastructure platforms who add agent tooling like OpenAI, Anthropic, AWS, Google, and Microsoft. I don't think we're down in that massive opportunity, but we're not down in that area. So I guess that's either good or bad depending on your perspective. But we're not competing with OpenAI, Anthropic, or the rest in that sense. And then Google ADK is optimized to build multi-agent applications that run natively on Vertex AI and Gemini with tight integration to Google Cloud. This is a full stack agent layer on one hyperscaler, not a neutral orchestration layer. So basically, Google ADK is competition, but you got to run everything on Google. So, there's Google, Microsoft, Amazon, and others. And then there's the smaller competitors for orchestration and infrastructure, Run.ai, Anyscale, Modal, Ori, and other emerging startups. There's enterprise AI orchestration. And this is interesting to me. IBM Watson X, ServiceNow, UiPath, Salesforce, and others are building task/agent orchestration into their existing workflow platforms. But one thing jumps out at me is IBM Watson. That, to me, that adds IBM to the list of suitors or buyers. So what's the implication of all this? Railtown is best thought of as a verticalized, sovereign-friendly developer plus agent ops platform, while LangChain is a horizontal, cloud-agnostic agent engineering substrate, and Google ADK is a Gemini/Vertex-centric agent environment. So look, I think Google's building its own castle, and you're either in Google's ecosystem or you're not, and you're not going to see the competition other than going all in. LangChain is horizontal. It's out there for the world, which is great. But I think Railtown has decided to focus initially concentrate. And then I think if in fact it becomes the critical piece, the layer that makes data centers and developers and AI software work beautifully, the world is their oyster. We're not there yet. These are barriers to entry and obsolescence risk. Technical and ecosystem moats, all players. Core chains / agent abstractions are not hard to copy. So that means LangChain there's not a huge barrier to entry in terms of competition or copying what LangChain does. On the other hand, once you get out there with the name and the money and kind of the go-to reputation, there's a certain stickiness and a acceleration in your acceptance. The defensibility is in the ecosystem. Enterprise features and runtime observability. Both LangChain and Railtown have that observability feature. My understanding is Railtown's is far superior. But again, LangChain goes with what they have. They have the money. They have the ability to buy media reports and articles, and they can fill it in. So the lead can shrink. For LangChain, a large open source community, extensive integrations, and co-evolution with LangSmith and LangGraph provide a non-trivial moat. Basically, you grow up together. Railtown specific barriers, deep coupling to software development workflows, error streams, CI/CD, tickets, release management, and to agents that understand specific code bases and organization processes is harder to replace than generic RAG/agent tools. And that makes sense. I mean, if you're skilled at picking up women in every bar as you travel the world, you're going to be horizontal, so to speak, with that great skill set. But if you're dating Raquel Welch or pick somebody else, and that's what you're good at, it's going to be harder to replace you with just some fly-by-night guy. So it makes some sense. It seems like it's harder work, but the fact that Railtown's basically letting TELUS or Uniserve do that work maybe offsets that. Data center and Railtown specific barriers. Data center and sovereign compute partnerships, plus Microsoft Azure Marketplace distribution, create integration and trust friction for would-be replacers. So there's a stickiness to Railtown's offering. Having said that, hyperscalers, Azure DevOps, which Railtown is in, GitHub, Railtown's in, how do you say that? Atlassian, ServiceNow, could integrate similar root cause progress report and agent ops features into their ecosystems over time. over time. That's why I think the company gets bought out. Everybody's in a race, and they're going to want to jumpstart their standing. Can competition make Railtown obsolete? Risk factors. Hyperscaler native dev tools absorbing many of the same features. Copilot plus Azure DevOps, Gemini, Cloud Build. Another risk vector. LangChain style frameworks adding first class dev productivity offerings and observability that plug directly into CI/CD and issue trackers, potentially disintermediating specialized tools. Another risk vector, enterprise workflow vendors, ServiceNow, Atlassian, GitLab, building deeply integrated AI for developers and AI agents for operations, which many customers may prefer to a separate software as a service solution. It's going to take a while, but you could see that sort of plug and play. Offsetting factors. Sovereign AI is to the good. Offsetting factors to the good. Sovereign AI and regulated data requirements push some customers to neutral or local providers. Railtown is explicitly leaning into this with sovereign data center alliances and sovereign AI factories. Railtown's focus on small to medium businesses / enterprises who want end-to-end developer intelligence, not just an agent SDK or an ADK, gives it room to be, quote, the AI layer for software delivery, unquote. The AI layer for software delivery rather than a pure framework, or both, I suppose. Takeaway. Barriers to entry at the framework level are modest. So they're all facing that problem. Real defensibility for Railtown comes from ecosystem lock-in, integrations, data center relationships, in organization, vertical learning. Railtown defensibility also comes from execution speed. Obsolescence risk is meaningful within 3 to 5 years. Again, I flip that concern on its head and believe the company won't even be independent in 6 to 9 months. I might be being optimistic. You have to judge it yourself. If hyperscalers and dominant dev tool vendors outship the company in its own niche, no one wants that. The embarrassment of being outshipped in your own niche. Market size, agent / orchestration, and data center interface. AI orchestration, an agent layer, total addressable market. Markets and market sizes in the AI orchestration market. I'll read these, but if you focus on around 30 billion, I think that covers it. But I'll read it. Markets and market sizes for the AI orchestration market, about 11 billion last year, growing to 30 billion by 2030. This includes agent orchestration platforms, model serving tools, agent builders, and data orchestration. Both LangChain style platforms and Railtown's agentic frameworks fit inside this bucket. Data center automation. Infrastructure, total addressable market. Data center automation is estimated beginning of this decade at 4.8 billion, reaching 32.5 billion by the end, by 2030. Another forecast pegs the data center automation market at 12 billion in 26, growing to 27.6 billion by 2031. These figures are global. North America typically represents 1/3 to 40% of enterprise infrastructure spend, implying an order of 10 to 12 billion USD in North America by 2030-31. The sovereign data center interface niche, Railtown and AIP explicitly target sovereign AI data center infrastructure in Canada, which I think is big. I think it's a big jumpstart, aiming to keep hundreds of millions of dollars a year. Well, I put an exclamation mark. That sounds very small to me. So I don't know what that's referencing. That's not a big market, hundreds of millions of dollars a year. I think Canada's hyperscaler market is billions, if not hundreds of billions, with a B, not with an M. But I'm not sure where that quote comes from. Of AI data center spend inside Canadian sovereign facilities instead of US hyperscalers. So take that as a warning. Maybe they see the market as smaller than I do. I think this is not a good quote on the size of the market. But in the early stages, I don't think it's going to matter to the value of Railtown. As things mature, if it's only hundreds of millions instead of hundreds of billions, it may have an effect on what we get. The data center niche, that sovereign AI slice is a niche inside the global market, but with the right consortia, it can be hundreds of millions in annual run rate as a market in Canada alone for tooling plus infrastructure and a multi-billion-dollar North America market as sovereign and regulated workloads increase. So I guess that gets to what I'm saying. It's a little bit bigger, quite a bit bigger. Component interface with data centers angle. Railtown emphasizes deployment on both cloud and on-premise, and collaborations with TELUS Sovereign AI Factory and AIP tie its agentic platform to sovereign AI data center tenants, which, again, I think it's a jump start. The TELUS collaboration explicitly uses TELUS's fully sovereign infrastructure as the runtime for Railtown's agentic development and observability tools. This positions Railtown as part of the software layer on top of sovereign compute rather than bare metal automation. And I think that's significant. Are others in the game? LangChain is designed to be cloud agnostic. It can run on any cloud. Well, so can Railtown, but obviously if you're on the TELUS cloud, you have to, hey, get off of my cloud. It can run on any cloud or on-premise environment, but it does not ship as a dedicated data center interface product. It is a SDK and runtime framework that developers embed in their own infrastructure. Google's ADK is tightly integrated in the Google ecosystem. Let's skip that. Many smaller infrastructure players run AI, Anyscale, Ori, Equinix, Metal, Digital Reality, Service Fabric are directly about data center resource orchestration and GPU pooling. Railtown is more about application / agent orchestration on top of these resources, not about the underlying GPU / VM scheduling itself. So what does it mean? Railtown's differentiation is not being a low-level data center controller, but being the agent / developer's intelligent layer closely tied to sovereign data center ecosystems, which I just think they're in a field of their own. They stand out. They got a jump start, which is not LangChain's explicit focus and is more cloud provider specific in Google's case. So if we take LangChain valuation metrics and apply them to Railtown, this is the funding of LangChain and the implied metrics. The seed round was in the spring of 23, roughly $10 million US. Massive OSS adoption. I don't know what OSS is. Early revenue proof points. Well, couldn't really. It's proof of concept, but they don't make money and they don't have a lot of revenue. I guess they'll grow. Series A was in the, I guess, still in the winter, but in February of 24, they raised around 25 million US at a $200 million valuation. There was developer traction. There was Langsmith enterprise expansion, early ARR multiples, but the ARR was non-existent. It couldn't have been very big. Then there's the Series B, which was priced in July of 2025. They raised 100 million at 1.1 billion USD. So this was the platform for agent engineering, enterprise customers, strong usage, retention. And I think this October closing was priced in the summer, but they said later round, 125 million US, priced at 1.25 billion US, scaling agent platform. Railtown scales, runtime, which I think Railtown excels at. LangGraph 1.0, no code builder, insights agent. Well, Railtown already has all that. But like I say, when you put, it looks like they've already put 400 and, I don't know, 400 and, whatever. It's 1.5 billion they've already put into this company. And Railtown hasn't put anywhere near that kind of money in. So that's either good or bad. Your money's not being wasted. It might be here. Who knows? you can see here where I yellowed Series A and Series B. I don't know where to tell you you're buying this. The seed round was 10 million. I think the price of the stock that you're paying for Railtown right now is essentially the seed round or the Series A round of a private financing. So it's very attractive. Oh, I see. And I guess this is the next one. The valuation drivers disclosed or implied include bullet point, massive open source adoption, downloads, GitHub stars, ecosystem integration. Bullet point, usage metrics, number of apps built, enterprise POCs, volume of agent invocations and traces observed in Langsmith. Bullet point, early but fast growing enterprise annual recurring revenue, with investors reportedly paying high forward revenue multiples for infrastructure like platforms. Bullet point, strategic positioning as a key neutral orchestration layer sitting between large language model providers and application developers. Applying LangChain metrics to Railtown. For a Railtown specific valuation framework, useful dimensions would be products and ecosystem metrics, number of active development teams and enterprises using Railtown tools, which are the root cause analyzer, Conductor AI, build and deploy, Conductor. See, this is where they're just repeating, regurgitating things they find. We know how they've narrowed it down to the 3 tools. Volume of errors analyzed, tickets generated, releases monitored, and agent runs observed per month. This is directly analogous to LangChain's evaluation observability volumes. Depth of integration, Azure Marketplace installs. Well, we know Railtown's embedded there or vice versa. Integrations with CI/CD, ticketing systems, Jira, Azure, DevOps, GitHubs. Well, Railtown has 3 out of those 4. Data center and sovereign cloud environments, TELUS, AIP, and others. I'd say it's pretty early in the measurement ability. Revenue and unit economics, annual recurring revenue broken down by pure software as a service for dev teams, sovereign AI/data center tenants via TELUS, AIP, and other partners. It's a pretty good description. Growth rate of annual recurring revenue and net revenue retention from teams expanding usage across more repos. I don't know what a repo is. Services and agents. Margin profile. Well, we know here it's close to 100%, but they don't know that yet. Strategic positioning and how much of the total market they can capture. The share of Canadian sovereign AI workloads relying on Railtown as the dev agent ops layer is one measure. Another measure is international. This I love, international expansion angle. ability to replicate the TELUS-type playbook with other telcos and sovereign cloud providers in North America and Europe and elsewhere. I think that's an upside that is really exciting. In LangChain's case, investors were willing to ascribe unicorn level valuations on the back of high usage, central position in the ecosystem. That's according to, a puff piece. I'm not sure that's true. And strong growth rather than mature revenue multiples. For Railtown, the analogous premium would hinge on demonstrating that Railtown is the default agent / dev intelligence layer. Wouldn't that be amazing for sovereign data center ecosystems, TELUS in Canada, and similar factories elsewhere? That right there is the holy grail. Proving that dev team productivity and agent observability tooling can scale, and we know it can scale. Well, you have to accept that I accept that Railtown can scale. I guess until we see it, there's always execution risk. Can scale into multi-$100 million annual recurring revenue line of business inside the broader orchestration of the total market by 2030 with strong net retention. If you want to go one level deeper, the next step would be to plug in Railtown's current expected ARR growth and all that stuff. That's what that other guy, same guy, I guess, was trying to do. We don't know any of that. So one of my contentions to you is, as the computers can start doing this, once the computers can start calculating current and expected annual recurring revenue growth and adoption, and then starts comparing it to LangChain, my contention is you're not going to have a $40 million market cap company. LangChain's probably already going to be valued at $2 billion or more. And you could debate whether Railtown should be worth LangChain's value or higher, but I think it's going to be hard to debate that Railtown will justify, or the markets have it correct in saying that Railtown's worth $50 million. I think it'll close the gap with LangChain or exceed it. Oh, that's not it. It's my eyesight. So I asked direct competitors under 100 million, because maybe you want to put your money elsewhere. Most direct competitors to Railtown and LangChain are private. So you can't even invest in them. That's the other advantage here. Yeah, there's risk, but this is one of the only pure play, well, to me, I don't have a broad enough scope, but to me, it's the only publicly traded AI play under 100 million that's available to you. But you might know others. Most direct competitors to Railtown and LangChain are private and do not disclose valuation. Sub $100 million valuations, therefore, have to be inferred from funding stage, round size, blah, blah, blah. So this list focuses on companies with similar agent / orchestration / dev intelligent products and is based on early stage funding profiles. But it's a guess. Railtown adjacent competitors, dev intelligence, agentic dev tools. These companies overlap Railtown's focus on engineering intelligence, code issue analytics, and AI automated dev workflows. Unit Q, Susie Q, ML Merrill Lynch, driven product quality and bug analysis from production data and customer feedback. I don't think it helps me reading what each of them do. So there's Unit Q, Diff Blue, Way Dev, and Dev Dynamics. ZenHub and Krugel. Given their modest disclosed funding and niche focus, these players are generally viewed as early to mid-stage. Absent large late-stage rounds, most are plausibly under 100 million today. LangChain adjacent competitors, and that's agent orchestration frameworks, which that's what Railtown does. But anyway, the closest direct competitors are framework runtime and multi-agent orchestration startups. And again, I think Conductor is better than what LangChain offers. But it's a big pond. Excluding the now unicorns, LangChain itself, and Hugging Face, odd name. The names they came up with here: Questflow, Syncari, Coval, and Rhino Federated Computing. A number of other orchestration AI ops startups appear. And they're all likely under 100 million until they raise significant B rounds. The biggest takeaway is you can't invest in those companies, any of them. Important caveats: valuation data for these companies is not usually public. Hyperscalers and large incumbents, Google ADK, OpenAI Tools, IBM Watson, X, ServiceNow, are strategically important competitors for both Railtown and LangChain, but are obviously far above any startup valuation threshold. And I think those are your buyers. Maybe Google, OpenAI, IBM, ServiceNow, they could buy. Railtown is publicly listed, so its market cap is the cleanest valuation reference. Peer comparison sites show it as a microcap with negligible revenue and negative earnings, trading at a very high price to book multiple relative to small cap software peers. With essentially no trailing revenue and a net loss of $2 million in the last 12 months, equity value is based on the story and optionality rather than classic ARR multiples or, in complete misnomer, discounted cash flow analysis. I mean, that's not the stage where this investment is. We're about at the beginning because of the suppression of price, because of the delay in news, because of emotion and uncertainty. we're at the base of the S curve in price, in valuation, if I'm right, where you're going to see algorithmic increases, almost skyrocketing increases in the enterprise value in the short run. By the time it's sold out, they'll be running their models on arithmetic rather than hockey sticks. For Railtown's real competitors, focus on AI-driven dev intelligence and engineering productivity tools, not generic small cap AI tickers that stock sites sometimes list as peers. Here's some spun or span. They were valued at 25 million US at a Series A, but post money, they're probably worth 100 to 200 million. Well, if you just use that post money range, and I only want to make one calculation. So if I use 200 million as the top line, as just one calculation, and we use a fully diluted 215 million, it's 93 cents a share for Railtown. I don't know if it's a fair comparison. The takeaway for SPAN or SPAN, high quality US based dev intelligence competitor, likely above 100 million, but below 300 million valuation. I think the 300 million valuation is important. Because of reasons I'm not going to say. Unit Q, another Merrill Lynch driven product. I don't know what ML means. Multi-level. 50 to 150. Diff Blue, likely sub 200 million. WayDev and Dev Dynamics. They've raised modest sums, seed Series A scale, 20 to 80 million USD valuation. They're indirect competitors now, but they will add more AI and agentic style features, pushing them closer to Railtown's lane over time. And we've got to acknowledge that. But that, to me, is why the company will sell itself. How do you interpret all this? Public peer lists show unrelated small cap tech or IT firms as competitors. For valuation work, better comparables are AI dev tools, orchestration, and observability companies, which we just ran through. Using the Canadian Stock Exchange market cap as base equity value, try to build a peer band using AI dev tool multiples. Early stage infrastructure dev tools often trade or raise at 10 to 25 times ARR, with median private market multiples by niche available in 25 AI benchmarks. We've been through some of that. Because most peers are private and do not publish valuation, any numeric ranges are estimates. For serious investment work, or as the turtle calls it, I'm happy with my own DD. Treat your numbers as bands. You can do a band, or as I call it, risking it. Rather than point estimates, will give a more realistic view. I think it'll all be outdated as soon as we start seeing numbers. Then I wanted to show you that TELUS did have news. And just like one can anticipate with a business-focused company like TELUS. They tell you that they're building rental housing in West Point Grey Village in Vancouver, which is certainly an exciting and important thing to put out there. Eventually, we'll see news from them that helps unblock the material private, public, non-public information that's holding us up. Okay, it doesn't look like I have too many comments. I'll try to make a more succinct statement. Thanks for translating. You don't have to. I just think people, all of us, we've got to focus on what we're trying to do here and not get lost in the overall environment. I think Railtown's a pretty succinct, as you put it, investment story. The investment in Railtown right now, to me, is in a story that's either known but cannot be acted on by many players in Canada, or just completely unknown. So it's mispriced. And I think as the revenue model becomes known and is disclosed, maybe not 100% disclosed, and then as revenues start to be booked, which I don't know when that'll be disclosed to in earnings reports, but it'll be shown to analysts. I think that's when you get the catch up in price. Hey, Fast Eddie, happy Sunday. All right, well, I think that was, let me see if I can get it. I did have, Ward sent me something that I thought I had copied, and I don't think I did. So let me see if I can do it. It shouldn't take too long, I don't think. It's taken me so long. Now that I know, I believe all that I do or say is all I ever will be. She stood beside me, letting me know she would be something to lean on when everything ran out on me. Fence yards ain't whole cards. Fence yards ain't whole cards, and likely will never be reason for rhymers, old five and dimers like me. All right, let me see if I can show you what Ward brought. It's not very long, unlike my little bit, so you don't have to worry that it's going to take forever. I think I included the questions he asked. All right, here. Talked about the premiums. Companies pay significant acquisition premiums for disruptive software companies, often 20 to 50% above market valuations. Well, to me, that's interesting because my contention is Railtown is mispriced. So you would, depending on how much you believe in my view, if, let's just do it for simplicity's sake, say that Langchain currently is valued at $2.25 billion, and I might be way off on that. But if it's $2.25 billion, then Railtown would be worth $10. And my argument would be, you're going to get that catch up, and then when it's bought out, maybe you get 20 to 50% above that. And if there's a bidding war, you could get a lot higher. So you might be talking a $15 target here in the near term as a buyout, which would disappoint me, frankly. I think it's worth more than that. But at least in a bidding war, we'll have a pretty good sense of what the market thinks. So people pay 50% or more to secure innovative technologies like AI, machine learning, or novel pricing models, such as freemium or outcome-based systems. These premiums reflect strategic value in rapid market disruption. See, that's something we got to be aware of. Scalable revenue streams, which I believe Railtown is stepping into Clover, and talent acquisition amid fierce competition from big tech. For instance, early buys like Facebook's $1 billion Instagram deal highlight how incumbents overpay to neutralize threats and integrate cutting edge platforms. Key premium drivers. Disruptive software firms command premiums because of their potential for high growth in areas like AI coding tools or, I don't know what P is. P as a software solution platforms. I don't know what that is. I can't think of it. Where valuations soar despite initial losses. Investors and acquirers bet on recurring revenue shifts, such as Adobe's subscription pivot that boosted ARR from $3.4 billion to $13.8 billion. And this is what I think if Microsoft bought Railtown, they could do. They could shift the revenue big league. AI-specific premiums also appear in talent wars with up to $200,000 bonuses for machine learning experts at startups. Well, we've seen much higher numbers too. Recent examples, AI coding startups like Cursor and Windsurf fetch sky-high valuation from VCs despite negative margins. And I don't know what this dangling participle here means, signaling 10x plus revenue multiples. So I think they were much higher than that. Big tech exclusive deals like Microsoft OpenAI involve billions in cloud credits for revenue shares, effectively subsidizing disruption. Software as a solution, AI features from Adobe, GitHub, and Figma, bundle premiums. See, this is a model. Bundle premiums into subscriptions or add-ons with credits or outcome pricing emerging as norms. Companies frequently acquire, I already read all that. Well, I'll read it again. Companies frequently acquire disruptive software firms to integrate cutting-edge technologies like AI, cloud-native platforms, and software as a solution innovation, often at premiums over market value. I think Railtown's market value is out of whack. You might not agree. Notable historic examples: Facebook's 2012 acquisition of Instagram for $1 billion exemplified early disruption in social media, neutralizing a fast-growing photo-sharing rival with massive user growth potential. Google's $12.5 billion purchase of Motorola Mobility in 2012 secured patents and Android ecosystem control amid mobile disruption. Microsoft's $26.2 billion LinkedIn deal in 2016 blended professional networking with enterprise software, reshaping productivity tools. Recent AI deals: Salesforce acquired Slack for $27.7 billion in 2021 to embed real-time collaboration into CRM, countering remote work disruptions. Broadcom's $69 billion VMware acquisition in 2023 targeted virtualization and cloud infrastructure amid hybrid computing shifts. In 2025, Google's parent Alphabet acquired Wiz for a reported $23 billion. But I guess it fell through. While IBM bought Confluent to bolster AI data streaming capabilities. Maybe IBM is a buyer. These deals often prioritize talent. In other words, it's an acquisition / hire, acqui-hire. Oh, Aquilum. IP and market share over immediate profitability. So they want the intellectual property, which Railtown has in spades, apparently, and they want the market share over profitability. But Railtown's going to have immediate profitability, and if they prove out, they could have huge market share with multiples of 15 to 20x revenue for high-growing disruptors in AI coding, fintech, and enterprise software as a service. Incumbents like Microsoft, wow, they've made over 300 acquisitions, and Salesforce use mergers and acquisitions to fill innovation gaps more quickly than internal research and development. Microsoft uses M&A to fill innovation gaps rather than internal research and development. Last one. Big tech companies commonly acquire disruptive startups to neutralize competitive threats, to acquire innovative technologies, and to secure top talent ahead of rivals. So they try to eliminate competition. Acquisitions often target fast-growing startups who could erode market share, such as Facebook's $1 billion purchase of Instagram or WhatsApp for $19 billion in 2014. This buy and thrill, unquote, strategy absorbs potential threats before they scale independently. Access technology and IP. Startups pioneer breakthroughs in AI algorithms or cloud tools, which incumbents need, exemplified by Google's 500 million DeepMind acquisition for machine learning expertise, or Alphabet's attempted 23 billion Wiz deal for cybersecurity innovation. Internal research and development lags in speed, so buying skips years of development. Talent acquisition. Premiums fund hiring elite engineers, as in Apple's frequent small AI firm buys or Microsoft's GitHub acquisition. And this strategy fuels rapid integration into core products amid talent shortages. Strategic expansion. Deals diversify revenue, like Salesforce's 28 billion Slack buy for collaboration tools, or Amazon's One Medical for healthcare reach, leveraging existing customer bases for market entry. Which is one thing. If Microsoft, for example, bought Railtown, they already have the world for data, for software development tools. They bundle it in, and all of a sudden they've got all this revenue spread out across the world, leveraging existing customer bases for faster market entry. Overall, these moves prioritize long-term dominance over short-term profits. And that's it. That is it. All right, Ward Richardson. William, I agree with you, and on your research was top-notch. Bottom line, RT will hit floor running. Buyout coming soon. That's my opinion. I'm glad you agree with it. I haven't heard it from anyone else, although I think some people are coming around to my reasoning, not saying they accept my reasoning, but let me use Microsoft, maybe IBM, maybe TELUS, whomever. But from a Microsoft standpoint, if they start seeing that revenue growing rapidly, it's going to start flashing on their leaderboard. We better pay attention to this company. One, two, if the more quickly they buy it, the less clear future revenues are, so they could get away with a lower price. But I don't think Microsoft is all about buying at the cheapest price. It's just about buying it. So another reason to buy it early is specifically in Canada, my understanding is Microsoft is the largest hyperscaler in Canada. Well, they'd have to get a team of attorneys together and draw ironclad documents such that any of Microsoft's data centers in Canada would be exempt from snooping from the United States. But by buying Railtown, they would have exclusive access to Railtown's technology, and that would block TELUS from doing the same thing to them. And then, TELUS would want to buy them early. TELUS needs to buy them early because I don't think TELUS can afford more than, and I don't know if the price is going to go this high, but I don't know if TELUS can pay $10 or $15 billion. If they paid $15 billion, that's half their market cap. But they might in stock. Of the two, I don't know. Does Microsoft go 10x from here? I don't think Telus goes 10x from 13, but it might go 5 or 6x. Does Microsoft go 5x from here? I don't know. I really don't know. We'll just let that sort itself out. From Railtown's standpoint, to go the route of being a unicorn, there's financing risk. There is the risk other technologies swamp you. There's the risk that you step your foot wrong and people make other choices. I can't remember which one succeeded, Betamax or VHS or Blu-ray, but they were all good, but one became popular and the rest didn't. You avoid that risk. You avoid that obsolescence or being sidelined risk. But more importantly, your technology, if you care about it, will suddenly have teams of engineers and money devoted to it, so it can go conquer the world. So I just, from a risk management standpoint, it makes sense for Railtown to sell early. From a competition management standpoint, it makes sense for Microsoft to buy early. And what we would hope for is a bidding war. And we'd also hope for that their visible revenue, their forward revenue scales so quickly that it's 100, 150, 200, 250 million forward 12 months by the end of the first quarter or by the middle of the second quarter. So when they're bidding on it in June, they're looking at growth to, I don't know, $500 million or $1 billion in ARR by the end of 2031 or something. And then you get a bidding war. The one last thing on Telus, whatever their arrangement is, Telus, it seems to me, is trying to improve their revenue picture. They want to be the leader in AI in Canada, or data centers anyway. And whatever percentage on the revenue split that you ascribe to Railtown, I think, like I've said before, I think 10% is too low. I think 50% is too high. For that matter, I think 40% is too high. But whatever it is, I choose to use 20%, but I don't know what it's all. I don't know what it's all going to average out at across Telus and Microsoft and AWS. I don't know. So anyway, if you use 20% and you assume that Entwistle is correct about his own customers, and sometime in the next few years, they start coursing $2 billion annually in revenues through their data center, and that runs through Railtown. Well, 20%, that's 400 million that Telus has to pay out every year. It's 100%, nearly 100% profit. And that's 400 million coming to Railtown. Well, if Telus sees that revenue, wants to control Railtown's technology, and wants to bump up its revenue profile, just buy the company. Buy the company. And, like I say, I don't know how much they could finance. I doubt there'd be much cash involved. It'd probably be an all-stock deal. But, the numbers would be phenomenal. I would guess they'd be willing in a bidding war. I don't know if they could go 50-50. That would be such a risk. Could they pay 30 billion for Railtown in stock? 50-50 old business, new business? I don't know, but I guess one way to do it is 400 million. They pay a 8 or 9% dividend or higher. Let's say 8. Let's do a cap rate, I guess, of 8. That's 50 billion. Did I do that correctly? Yeah, it's 50 billion. They can't afford that. But so maybe, the eggheads can justify paying 15 billion or 20 billion in stock. That'd be a hell of a story. But it'd be a little risky for us because TELUS would be probably stretching themselves. I think Microsoft paying us 1% of their market cap it'd be a nice exit. All right, William, I agree with you on Ward Richardson. William, I agree with you on your research. I agree with you, and your research was top notch. Bottom line, Railtown will hit the floor running. Buyout coming soon. That's my opinion. William, I can think of at least 25 or so companies itching to get their hands on Railtown technology. It's all about who has the most efficient software wins. See, I agree with that too. Your user is not going to want to waste money using the data center. And Railtown's observability tools prevent blowups in the software, whether it's from endless loops or analyzing too much data or security breaches or software shutdowns. So, and more. I'm just listing the things I understand. So, Justin Babish, what about those data centers? That guy from Shark Tank said he wants to build in Canada. Can Microsoft make money being a partner with RT and not need to buy them out? Yeah, it's an interesting point you bring up, Justin. Could Microsoft do an Aqua hire or a lease hire? Could Microsoft offer the top guys at Railtown unbelievable salaries and packages, and then just lease the technology instead of buying Railtown? Well, yes is the answer. I mean, the reason that happens in the United States is to get around regulatory delays. Canada, I assume, has that same delay problem. But let's work that through. The two top guys at Railtown are, older than your average software engineer. So my guess is it might be flipped a bit. They bid on the software engineers and set Marwan and Corey out to pasture. I don't know. But what's left is a licensing agreement, and that could be huge. It could be multi-billions, or it all depends at the stage at which revenue is definable or reasonably definable going forward, or agreed on where it's going to head. And then you get a bidding war. So in that situation, maybe what happens, they flip it a little bit. The engineers go to Microsoft and Corey and Marwan remain behind and Dr. Elliott, I think, remain behind to run a company that gets all the licensing revenue for a while. I think we'll still make the returns to our investment would still be high in that case. Could they just do just do an arrangement where they work together? Instead of being bought out? I'd say yes, but I'd say it would end up being reflected in our share price pretty dramatically, because it would imply huge revenues. I don't know how that would. I don't know that the company would enter into such an agreement on an exclusive basis. So I would think a Microsoft would want to just buy the whole thing to lock down the IP and make it exclusive. But yes, they could do a joint venture instead of being bought out. But Microsoft can't make money as a partner and just take the technology. We will benefit, and I would say the price would be, in the situation you described, just the visibility. I think Microsoft would be creating potentially a competitor, but creating a company that wouldn't necessarily have that they would have exclusivity with. And then Railtown could be much bigger to buy out later. Yes is the answer, but I don't know that it's the path Microsoft would choose. I think they would want to buy Railtown. And of course, Justin, I emphasize, they're my favorite, but it could be IBM, it could be an Oracle, an Amazon, a Facebook. It could be a lot of different people. Justin says, maybe we as a group should come up with a price range we would be happy or not happy to get as a buy offer. Yeah. Look, it's going to matter if there's only one bid. And then that's going to matter to us. I think the problem will solve itself if, to me, there's three obvious buyers. TELUS is an obvious buyer. Microsoft is an obvious buyer. And believe it or not, to me, Constellation Software is an obvious buyer. Or they divvy it up. NVIDIA seems like they'd be interested if it works in their stack. I think Amazon services would have an interest. There's no indication that LangChain solves the Amazon stack issue. IBM. So all you need is two buyers, Justin, and the price goes up, and it solves all your concerns. But yes, if we want to make sure, see, when I divide it out by fully diluted shares, that's probably not how the votes go. I think there's 193 million shares outstanding, something like that. And I don't know how to add in what Dr. Tom Core and Norbrega and Ruffalo own and the rest. But if they're the majority of the 50 million, I would guess that the insiders and the control people have at least 40% of the vote, maybe more, maybe less. So if they put out a proposal that they support, it's going to pass. It's, we're not going to be able to block a popular, if the insiders accept it, we're not going to be able to block it. We can try. I'm not against your idea. But they probably have the best tools to assess the market. I do think, which is a blessing, by the way, Justin, everything's an art, not a science. I do think they'll accept a lower offer to get a deal done than maybe you or I would. But I tell you, it's better to have a CEO like that than a CEO who won't sell. When you have a board and a CEO not willing to sell, you can miss the whole boat. So it's going to be a little bit of que sera, sera. I knew Doris Day before she was a virgin. Ward Richardson, William, it is very clear to me Microsoft buyout coming faster than most think, and this could turn out to be a hell of a bidding war. I happen to agree with that, Ward. And if it doesn't happen, they're going to take you and I to you and me to a loony bin. Hopefully, we'll have our separate rooms, but but I agree with you. I think it's Microsoft all day long, and I think it's going to happen before. It might happen before we even get a sniff of what revenues are. Look, Microsoft, let's call it $500 a share. If Microsoft buys Railtown, let's say at $10, is that for every 50 shares we have, we got one share of Microsoft? Well, that's an amazing investment, but it would disappoint me because I would hope the buyout would come at 20, 30, 40 bucks a share, or 50, my favorite number, 55. But we may not get that chance. And then the idea would be that the growth would come in as a part of Microsoft. Well, let's just say my target is $50 for easy arithmetic. That means from $10, if that's the buyout price, Microsoft has to go up 5x to get my ultimate target. Well, is Microsoft going to go from $500 a share to $2,500 a share? To me, that's asking a lot, particularly considering I also expect the markets to have the 45-year secular bull market to end. But TELUS, if they paid that same price, we might get, one share of TELUS stock or 2 shares of TELUS stock for 3 shares of, it'd probably be for 2.5 shares of Railtown. And TELUS from $13, I think it could go 5x. So in a way, I'd rather have TELUS in that situation bias. TELUS is a less certain play because it's Canada, because it's basically a utility. Now, IBM's a much more interesting story. Could IBM do 5x from here Let's say they paid $10 for us. I think so. I think IBM could. Anyway, you get some of the different variety of, but I also agree with you, Ward, that I think as long as Corey doesn't put it out, if Microsoft says, all right, we're gonna offer you $500 million and we'll give you, 25 cents cash just to sweeten the deal. If Corey puts that out and it's an exclusive thing, there won't be a bidding war. And I would have to say, if the insiders want to do it, that'll be a disappointing deal. And we can't control that. They have 40, 50, 45% vote. So if they want to get out early, we have to get out early. But it'd still be a great rate of return if it went to, if they sold it for 210 million, we'd get $1 a share. And they'd probably say, well, that's a great return. I don't think they're going to do that, but I guess there's some risk to that. Or 500 million. I don't see that happening. I think $1 billion or $2 billion would be the low end of the range. My personal high end is 40 or 50 billion. But I brought that up when I talked to Corey. He didn't say that I was a lunatic, but he didn't really confirm that. I don't think either he didn't want to jinx it, or he just didn't want to address my stupidity, what he considered my stupidity. But, 1% of Microsoft is essentially 50 billion. No, sorry. Essentially 40 billion. I think NVIDIA is 50 billion, whatever, big numbers. And they just issue stock. I'd much rather get our hockey stick that way than having to wait for the buyer's stock to go up. But we'll find out what happens. We'll find out. I do think it's going to be a bidding war, though. Justin Babish, like $1 million is an insult, 10 billion is fine. Yeah, they're not going to. The one thing, Justin, to bear in mind, I don't remember the exact numbers, but for all intents and purposes, Corey and Marwan own, on a fully diluted basis, they own 40 million shares. So, and I don't know what John Ruffalo and Dr. Corey, the rest, I don't know. But if you add all that in, I bet they have at least 60 million shares collectively. It might be more than that, fully diluted. But they're not going to sell at $1, I don't think. Unless they get a real pitch. I mean, maybe a fast-growing company has a kick-butt technology and they get sold in. That's the other thing that could happen. One of these private companies like Langchain could buy Railtown in an organized sale by Benchmark or Sequoia or Kleiner Perkins, or Morgan Stanley could come in and say, we want to, and then that I can't quickly decide what would be in the interest of the privateers. I don't think it would be in their best interest to go public that way. I think it'd be in the best interest to buy Railtown private, because then they can manipulate the price much higher. There's a lot of ways, Justin, but I guess my bottom line is they're not going to be stupid with their own wealth. Corey's, I'm sure, younger than I am, but he's not as young as you are. And Marwan's young, but this is their last grasp at the golden ring, um, one would presume. So I don't think they're going to sell too low. And like I think Ward agrees with me, but I'll just take responsibility for it. I think this is a case where you're going to see how a real market works. You're going to have buyers bidding against each other, one company for sale, and you're going to see what happens to prices with real price discovery rather than the heaviness constantly pressing downward. So your concern is not um, to be ignored. But on the other hand, it's not likely. I think the market will take care of the low price almost immediately. All you need is, Justin, all you need is just think it through. I'm actually having a hard time thinking it through where the revenue would show up on revenue runs. But let's just say that TELUS, now here's another one of my assumptions. Everybody says the TELUS data center has been open for business. All right, I accept that. But to me, it's been a dress rehearsal. It's been a dry run. Let's just say they really turn it on and start accepting orders. It would seem like TELUS will see the revenue and the research analysts. It would seem like Railtown will see the revenue and potentially analysts. But it would also seem, Justin, that Microsoft would see the revenue. Why? Because a lot of the revenue jumps, we hope. A lot of, I don't know how the correct way to say it, but Railtown's tools are embedded in the Microsoft tools. Or maybe you say it the other way around. Regardless, when someone wants to use Railtown and they're a software developer who's comfortable with the Microsoft software development space, which is probably 95% of developers in the world, I think Microsoft could start seeing it won't be a blip. I think they'll be able to track what's the revenue happening and how sticky is it. Could Cohere, or what are the other ones, OpenAI and Anthropic, could they see it? Maybe, but I don't know if they'd see it. I don't know if they'd see it as it relates to Railtown. I guess people following like LangChain might notice a drain in some of their revenue, but I don't know. The market's just growing so big. I don't know if that happened. But anyway, Justin, I think Microsoft will see the revenue and want to act early. I don't know. NVIDIA definitely will see the revenue runs, but will they see it as it's applicable to Railtown? I don't know. Maybe. I don't know how. They have sophisticated computers. Maybe they would be able to say, well, we like this Railtown product. So maybe you got a bidding war with Railtown and for Railtown with NVIDIA and Microsoft. I don't know about IBM ever seeing those numbers. The other thing to know, Justin, in my sense, is what the hell does Microsoft have a desire to run AIP networks? Who are they going to assign to that? Are they going to leave Dr. Tom Core in as a new director of Microsoft or something. I think in a lot of scenarios, the buyer of Railtown will either spin out AIP to us as shareholders or sell it to Constellation Software. I think Constellation Software, if the price is low, will come in and bid on the whole company. But in the process of bidding, they're in the mix. And, you know, overpaid wankers will come up with different strategies. And someone genius will think about, well, what are you going to do with AIP network? What if we just buy that from you? So we might have two different sources of data. I don't know. We'll find out. It's all speculation. If I were in court right now, the opposing attorney would say, object, Your Honor, calls for speculation, and Your Honor would say sustained, and I would start to try to talk, and the attorney would kick me if he could or she could under the camera site to shut up. It's all speculation at this point. Justin Babish, and acqui-hire proceeds go to the holders. Well, no, the aqua part goes to us, but the biggest part of the monies go to the hire. So if they offered Corey $1 billion and they offered Marwan $1 billion signing bonus to move to Facebook, and the engineers went to either Facebook or Microsoft for $100 million each, they got that money. We don't. But the IP belongs to us. We're the shareholders. It doesn't belong to the employees. So to get the IP, they would either have to license it from the company that remains behind, and maybe one director, maybe Paul Woodward, stays behind to run the company and becomes the CEO. They would have to pay licensing arrangement that I would imagine would equal or dwarf what they paid in the hires, I would imagine. But it's all negotiation. The other thing is they could just buy the IP. Well, in that case, just buy the whole company. Now, $1 billion, if they hired away Marwan Haddad for $1 billion, you know, he's got 20 million shares. Not quite. Or actually, I think he has a little over 20 million. Anyway, that's $50 a share. He'd feel good about that. Yeah, it's a new way of buying companies, and so buying companies is not as straightforward as it used to be. And it's all about getting around regulatory delays and concerns about competition. For somebody to offer that much for Corey and Marwan as a hire, they'd really have to be valuing this technology by a lot too. So I think we would be just fine. I'm not sure that Corey and Marwan at this stage are as critical to our IP as the engineers. But I don't know that. I don't know that. I don't know, Justin. All we can do is wait and see. Um, I would give it at least equal odds that it won't be a straightforward acquisition. It could be we're gonna pay for the engineers. We're going to distribute AIP. We're going to lock up Marwan and Corey as some sort of advisors for 5 years and pay them a lot of money. And we're going to either license the technology for a massive number, which I assume Corey would not accept as exclusive, but maybe he would. We'll leave the company out there, or we'll just buy the company as well. I don't know. There's a lot of permeability. Is that the right way to say that? Ward Richardson, Kevin O'Leary's plan is to rent those data centers to hyperscalers. Yeah, I think that's what happens with Uniserve. That's like owning the office buildings, right? That the government leases. That becomes a very powerful cash flow, wealth creation, inflation model. It's a pretty strong idea. Justin, I still want NVIDIA as a stakeholder, not a buyer. I don't know. I did a little bit of this investment banking or whatever, raising money back in the 2000s, before and after. And it was with Lucent Technologies, and I forget the other ones. Verizon might have been in there, and some others. But I would guess that if they were to become if NVIDIA were just to become a stakeholder, it would be in the format of, some sort of lending their data, their chips to Railtown, or giving Railtown access to compute power, or maybe lending engineers. But I'm not sure it'd be cash. I'm not sure. And I'm not sure cash would be the most important thing that NVIDIA could give Railtown either. We forget, and I do constantly, that we still have, and of course it's also an assumption. It is also an assumption. But we haven't seen buying in Railtown. We've bought it, and there's other people obviously accumulating, but we haven't seen a technology-led mutual fund buy. We haven't seen an AI led investment bank buy. And so I continue to think we're looking at the wrong price on the stock. And you're going to feel a lot more comfortable, if I'm right, if the stock goes to $5 or $7 or $8, just to catch up with, let's say, LangChain's valuation. And then from there, they start talking about buying the company. You're not going to feel as vulnerable, maybe, as you do now. But yeah, it'd be great to have NVIDIA as a partner. I just think it'd be cleaner. It'd be cleaner if there's a bidding war. What do you do if NVIDIA is a partner and then TELUS wants to buy it, or Microsoft? I guess it's easy enough. It's all in the negotiation. Justin, what if Microsoft buys 51% and then votes their own offer? Well, it would be, I don't know, if you want to go down that route. They don't own anything of Railtown now. So they'd have to buy in the open market, and you haven't even begun to see that. But the manufacturing of shares by the stock loan desks and the so-called market makers and the computers selling would stop. So, or would greatly diminish as soon as Microsoft started buying in the open market. And I would doubt, I mean, I don't have any database or supercomputer to figure it out, but I would doubt that Microsoft, if they were buying, even through intermediaries, I don't think Microsoft could buy 10 million shares without the stock price being $15 or $20 a share. So in your scenario, if they're buying in the open market, I just don't see where you lose if they start buying in the open market. But if, on the other hand, they go to the company, to Railtown, and say, we don't want to buy you, we just want to buy 51%, we want to own 51% of the company. And so Railtown would have to issue 225 million new shares to Microsoft at some price. What would Microsoft gain by that? They wouldn't have to buy 100% of the company. They just buy 51%. But if they come into a public company and that company issues new enough shares so that Microsoft owns 51%, just assume they do it at $1 or 50. Assume they do it at 50 cents. Number one, I don't think Corey's going to agree to it. But number two, I think the stock market price is going to go way beyond what Microsoft pays, or potentially could. So what would Microsoft gain in that situation? Then they would be a majority shareholder. They wouldn't control management. They wouldn't have exclusivity on the technology. Anything that management can do, well, I guess they changed the board, but I don't know the formation documents. Do you need 51% or 3/4, 2/3? I don't know the formation documents to change the board. Might only be 51%. If they change the board, they can change management. It all takes so long. If they did that in conjunction with giving Marwan and Corey employment contracts and giving the engine, they'd be gutting their own. So you're basically trying to figure out a way that Microsoft can steal the company with manipulating the price and manipulating their offers. Look, if Railtown it's a stock on its rear end in terms of market cap. But if it were a stock on its rear, which it is, and in an industry that's ignored, maybe an acquirer would have time to go do all those things you're saying. Just trying to think if they could do it quickly. There's just too many eyes in this space. As soon as Microsoft starts moving, people are going to pay attention. And I think it's too cute by half. And the other thing that you're not understanding in what I'm saying, and I might be wrong, by the way, Justin, whether Microsoft spends 40 billion, 20 billion, or 5 billion really doesn't matter to Microsoft. I know it's hard to believe. They're just going to give shares. I mean, there might be internal procedures where if they offer $1 billion, somebody inside gets credit for it. And if they offer 40 billion, Bill Gates has to see it. I don't know. But I'm telling you, so I could be wrong. But that's not, the price is not the biggest part of the decision for Microsoft. It's just owning it and controlling it and not wasting time, moving forward. I don't know, Justin, let me think about that. I don't think they could buy 51% in the open market at all. I mean, the stock could be $100 if they did it rapidly. If they negotiate to have the company issue new shares, and how would that be calculated? And all of a sudden the company has all this cash. I don't know why the company would agree to that without making sure that the board doesn't change for a period of time, management doesn't change for a period of time, that the company can sell to other hyperscalers their product. It's too many loose ends. I don't think Microsoft would be accomplishing what they're setting out to accomplish. It's too sloppy. And I don't think there's any guarantee that they would save money. And I'm just telling you, I could be wrong. You don't have to agree with me. Microsoft's motivation is not, in the first instance, to save money. Their motive is to rooster block all the other competitors and to internalize the technology if it's so great. I don't see it. I don't see it. And then you create a whole let me think it through, Justin. I don't know why they would go that route, but I'll try to play with it, all the different scenarios. But if they're buying the stock in the open market, the problem takes care of itself. If they make a Dutch auction offer to shareholders, I don't think they'll get that many shares without the price going up to phenomenal levels. Justin, I don't see it as practicable, nor do I see it as fulfilling the goal that Microsoft would have, which is to block the competitors and to control the technology. But let me think it through. Ward Richardson, I will be herding more cash cows on Tuesday morning. It might be the last time to buy. Well, I hope you do. We are at 17 million shares. It's an interesting question. Is it the last time to buy? If Railtown is going to go to 2.15 billion in valuation, it's a $10 stock. You can argue with me it's not going to go that high, or it's going to go higher. But if that's the starting point, if Langchain's next raise is at 2.5 billion, well, we might have a $10 stock on our hand. So should you buy more shares at $1? Should you buy more at $2? Should you buy more at $5? Should you buy more at $8? I don't know. It's an open question. Justin, Corey has 17 million. Marwan has 20 million. We have 17 million. AIP is 50. That's 104 million of the 195 million outstanding. Well, the float is roughly 104 million. And a lot of what the 50 and what Corey and Marwan have are not available right now. So we have, Justin, I'd have to look at the documents. If Corey and Marwan control that through employee options, you don't vote employee options. You don't vote employee options. And you don't vote warrants. You don't vote convertible bonds. You only vote what's issued and outstanding. But yeah, you're presenting the issue from both sides. The insiders control, ultimately, if they say we approve this acquisition and they vote for it, it's probably going to go through. On the other hand, we may, and you would be a great advocate for it, we may be able to put in a competing bid or organize it or go to Japan and meet that Soraya-san. We need more voting control. Buy more. Ward Richardson. William, IBM is one of the 25 or so companies I was thinking about. I think IBM is regaining its footing as a leader. And what a better time to catch up with Microsoft, Apple, and the rest by leapfrogging ahead in the AI space. And they can do it. Justin Babish, without our 17 million shares, that's less than controlling. Yeah, I think in their most recent, I don't know if I have it right here, I think they showed that they have around 42%. But Justin, they'll put it out to a vote, and there'll be conceivably 4-to-1, 5-to-1 shares in people's accounts. And we just allied the issues of counterfeit shares in the vote. That's one of the things, as they've decided to make the security system an analog to fractional reserve banking by creating fractional reserve securities, they forget all about the vote. So the vote is going to go with management. I would say 40% is enough to control the outcome of the vote. The hedge funds, the buyer, Microsoft, people that want a favor from Microsoft. So I think it's enough. Justin, if Microsoft tried to buy RT on the open market in shares and got rehypothecated shares, then stood for deliver. That's all. I think it's all in the past. I just don't think that's going to happen. But what would happen is the selling is program selling. And the selling computers would notice that whatever ranges that the settings are have been broken. So then they'll back off on the selling until a human being can look at it. And your stock loan desk might say, no, we're not going to sell anymore until this gets under control. Or the human being might say, move away from this stock for the time being. Let's just see how high it goes. Because everything goes to a level. And then they can start doing their games again, mining the stock for pennies. But while it adjusts to the buying, I personally think what we call counterfeiting will stop. But there's no delivery, there's no proof. It's all opaque. It's just, it could be done. By AI, it could be done in a heartbeat. But they intentionally keep it in the dark. But no, I don't think there would be any effort by Wall Street to find real or counterfeit or deliver or any of that. But you're right, Microsoft could, by buying the company, it's going to be some pressure because Microsoft's only going to buy 200 million shares or whatever the number is. If there's 1 billion out there, there could be a squeeze. There could be. If in the buyout, they first distribute the entirety of the AI partnership network to us, there could be a squeeze there. Particularly if that AI partnership is then bought into Constellation Software. So there are reasons where there could be a squeeze. I hope not. But, there will be a low end of the range of a squeeze where I don't think it makes sense to sell, but that'll be up to everybody. But in the middle and high end, obviously at the high end, it probably makes sense to sell. But, Platinum Blonde doesn't get it. But what would she get if she dyes her hair platinum? But if there is a risk if you sell, not obviously you got to pay taxes, but if you sell, you won't be able to reestablish your position. I don't get it. If you sell, you can always buy back. Tony the Turtle. Yeah, right? You've been given the gift that these computer programs are selling security entitlements and they're expanding the amount of shares in the markets because of a rule change that Bill Clinton approved, and it's expanding a block of stock up at the central depository banks. And as long as the stock trades inside of a reasonably controlled range and downward, they'll keep doing it. But you don't have to look further than Torchlight to see what happens when you reverse into another company and you issue a private distribution. They can get in trouble. So you could have a squeeze. I hope not. I don't want to deal with a squeeze. But if we have one, we'll face it at that time. And if I had to guess right now, Justin, for me, the stock would have to go over $75 before I would sell. But that's off the top of my head right now. And that might be insane. If it were to squeeze to $20, I'm not sure I'd sell, because I think it's worth 50. But I don't know. We're just going to have to face that when it comes. There's always another train. However, I don't think you're ever going to see this setup where two guys, Corey and Marwan, started early intentionally to be ready for this transformation. And because they were early, no one knew what the hell they were talking about. So they had to go public. And then that's number one. Number two, as they were proving their concept as being commercial, seeking buyers like Langchain has successfully done, buyers of their product, they ran into AIP partners, and AIP said buy us. So that started a period of time from February 8th. It's going to be almost a year in another 3 weeks where they haven't been able to talk and they haven't been able to have buyers, whatever you want to call that period. Our annus horribilio, our horrible year. So that's a unique situation I don't think you're going to see again. And then as they announced on February 8th, MOU, LOI, Canaccord Genuity, weeks, acquisition, negotiation. These are all buzzwords for those computers to automatically sell stock in the over-the-counter market. So we've also had, for the last year, selling on a manufactured scale that suppresses the price. And it's happened in 2 countries. I don't know when you're going to see that again. And it's a public company instead of private, so you can buy it. And then on top of that, during that period of blackout, the company entered into a phenomenal, it seems like, arrangement with TELUS, although they won't tell us about it. And yeah, they're going to have to at some point. But of course, the computers just continue the heaviness. So you and I think, oh, that's not significant news. But when we put it together, it might be hundreds of millions of dollars in annual recurring revenue coming to Railtown just from that deal. Particularly when you lump in the AIP is going to transfer it. I don't know when you're going to find a story like that again. And then either by luck or intelligence or experience, Railtown did not raise money in the American over-the-counter markets. Railtown did not allow the stock price to interfere with what they negotiated. It might have a little, because that's a complicated formula. But in essence, they did not allow the stock destruction of price to change the deal with AIP. In fact, you could argue the number of shares was reduced by about 10%. No, not 10%, 1%. But still, it's fewer shares. And then they, because of the cleverness of Railtown, they issued short-term warrants that either have to be exercised or not. So there's cash coming in. And on top of it, it looks like the TELUS deal is going to be a sign-up situation where you do on your computer, and as soon as you go click, 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 you're in then, and you're starting to pay monthly costs, but that becomes monthly revenue to TELUS and to Railtown. Their revenues are built to scale. I don't see you're going to find a train like Railtown again. You might, and I certainly think the way ahead for gold and silver and oil and gas, there's some variability, but for the miners and the next bull market, the leadership is going to be much different than this one. I don't know what the numbers are. You could probably Google it, but technology or communications is a huge part of the market. If you're managing a pool of money and you want to spend time on mining, you're going to spend the same amount of time, but it's like 2% of the market. So you're going to spend your time here in these kind of ideas. And I just don't think you're going to find a mispriced stock like this, if I'm correct. And have the chance to slingshot to 25x return on your money, and then from there have another 5 or 10x upside, maybe more, who knows. But in a squeeze, maybe it's enough. Just get out, pay your taxes, move on. Or you want to be in it longer term, maybe you get out and just go buy IBM shares. I don't know. We'll face that. I suppose, Justin, if, let's say in this February, my choice of transition is the Lunar New Year. It could be the return of the Anunnaki later this year, or it could be in March, but some point in the relatively near future, I think things are going to change, and you're not going to need me saying it, but I guess it depends on who buys us and how quickly it's done. I mean, ideally, if Microsoft comes in with an all-share bid at $8, which might be too high, by the way, and then NVIDIA says, we want in that, we're willing to go to $12, and I don't know, IBM comes in at 17, and then Microsoft says, hell no, we're going to just take it all out at 25, and maybe they're going to we'll add 250 in cash, and we'll distribute the AIP network, which our team has already organized for a sale in stock to Constellation Software worth another $5 a share. So all in, you've got $32.50 a share. Well, then you've got a target that if it squeezes beyond that, you pretty much know you should get out. But you got to take into account tax consequences and where can you deploy the money. Maybe Microsoft and Constellation Software is where you want to be. I don't know. So many unknowables. Ward Richardson, trust me on this. All the CEOs got their eye on RT right now. Why should I trust you on that? Why should I trust you on that? I would say the names we've talked about, you're right. And, it's basically a dozen, maybe 24 names. But I still think there's a lot of people out there that haven't even heard the Railtown story. They hear Langchain because Sequoia et al. Hired lobbying firms and they plant articles and they self-promote. But they haven't. I agree with you. This arms race, they probably have spies everywhere. It's all hands on deck, and it's national security. Maybe Greenland should buy, maybe the Danes should buy Railtown and give them leverage with Greenland. Justin Babish, then the valuation of the stock would go out of control. Right. I don't think, Justin, any company is going to allow a short squeeze to define what they pay for a company. But a bidding war could go out of control. They're not going to, pick a company, IBM. They're not going to go into the open market. This isn't the green mail days of Michael Milken. It's not that. The ripple is this breaking the team. It's a way around for the time being, buying the company and getting delays for antitrust or just regulatory days. If you can hire the team, they call it an acqui-hire, you hire the team, leave the assets with a company, you can argue with a smart set of attorneys, well, we didn't buy the company. But the licensing agreement would have to be big. So the value would show up in the stock price. I don't know how much longer the regulators are going to allow it, but under a Republican administration, it's probably going to be that way for a while. Justin Babish, how can an acqui-hire be legal? Well, they've been accepted. There's been I think they've been challenged. I haven't studied it, but there's been no case where a court's ruled against it. They're not, you're right, Justin, an acqui-hire has to, now you're getting into unknowables, but the shareholders, there's an obligation to treat the shareholders fairly. And so, using our example, if an acqui-hire happened and let's say the stock price they bought us out, they acquired the employees and they paid in licensing fees a present value of $10 a share. you're not going to win in court if you could conceivably have shown that the company would have been willing to buy us out at $40 a share. You'll never win that $10 to $40. It's very hard. Maybe I shouldn't say never. But an acqui-hire has to treat shareholders properly in the sense that the company will still exist. The company will have to license the technology at, and they're not going to get the vote on the deal, even from the people they hired, unless it treats shareholders fairly. But you would have such class action suits that it would delay everything. Remember the goal, they don't want delay. They want to acquire it immediately. This is an arms race. But there are those who say they shouldn't be legal. It's a way of evading the law. But they can't, Justin, you're trying to come up with ways they can steal the technology and leave the shareholders with nothing. I guess your idea is they could bribe the senior guys. It's still everybody go to jail. I think you're seeing ghosts. On the other hand, you're right. It shouldn't be legal. Or it should be tested whether it's legal. Ward Richardson, William, it will be an interesting few weeks and months ahead. Yeah, I think, Ward, the worst case, as I said, and of course the boo birds came and attacked me. But notice they haven't done that. They were doing that in the last 1 or 2 weeks in December. They wanted to close their books, and they did. Now they may want to do that in January. We'll see. I mean, not close the position, but be able to show to their clients, hey, we did well. But the worst case to me would be that TELUS takes, I mean, they did announce today that they're building a rental unit in somewhere without meese or mooses. So they're getting through their important news announcements. But the worst case to me would be that earnings for the calendar year first quarter, which is their second quarter, won't be reported until May 15th. And then it takes a week or two for analysts to digest it. And you see your first report, say June. To me, that's the worst case in terms of time frame, that somehow everything's tight in terms of news until then. But I guess you could imagine a worst case that in the first quarter, they don't sort of ramp up that data center until the end of the quarter. So maybe the first quarter doesn't tell us so much about revenues anyway. That would be kind of the worst case scenario ahead of us. I think it's much more likely that sometime in February, maybe March, but I would say early March. I guess I would say my worst case scenario would be late February, early March, that you start seeing revenues grow rapidly. And the thing is, they being the privateers, they priced Langchain based on 1 month's, I think it was 1 month's revenue, June. But they extrapolated June's run rate and they came up with the annualized number. Of course, it might have just been poorly written or I misunderstood what they wrote in the article. But I think 30 days, 45 days of ramping, if you can turn ramp into a verb, ramping revenue is all you need to excite everybody. So I wouldn't expect, I guess, I wouldn't expect buyout offers to come unsolicited. It would have to be internal growth that a Microsoft or a NVIDIA is seeing to get an unsolicited bid in the second quarter of the calendar year. If it has to wait until revenues get released to the general AI community, it might be June. And I guess if no one believes, maybe things didn't happen in the first quarter, maybe you have to go all the way to September 1 so that the second calendar quarter gets recorded. But I don't know, Ward. I just don't see if it starts ringing the bell on Microsoft's own revenue runs. I just don't see Microsoft waiting till the rest of the world knows about it. But now you're getting into my fantasy, maybe fantastical thinking. I don't think there's going to be a bid for the company in January, February, or March. Probably not April, but I don't know, May or June or July. I think you could see unsolicited bids. We'll see. We'll find out. Justin Babish, Landlord O'Leary is what they will call him. They might call him the great-great-grandson of Mrs. O'Leary, whose cow burned down Chicago. Steve, as long as we're on the right track. You're slaying me. You're slaying me. Ward Richardson. Yes, IBM has been making some big moves here lately, William. Yeah, I don't understand. I'd like to study it. I just read one or two articles on IBM, and I think they're suddenly not only a player, but they could become one of the big future stories. And you could lose one of these companies. You know, Google seems to have come up with this whole internal stack, and it doesn't seem like they want to sell it outside. And maybe that's how they're going to remain unique. Maybe maintain their lead in search. But to me, AI could beat their search, maybe. The vulnerable ones seem to me Facebook, which blew a lot of money on Meta, but they still have so much annual revenue. So Facebook has to gamble. I think IBM can make very calculated commitments. AMD needs to really catch up. I'm sorry, Intel really needs to catch up. Intel. So they got to gamble a bit. I think AMD's playing their cards correctly. NVIDIA is the winner. And TSMC, or whatever the call letters are, they'll be fine unless China attacks. And then the world will go into a depression. Apple to me is vulnerable, but everything I use is Apple. But I understand they missed the I understand they missed the bet on AI, so they're scrambling to catch up. But they have huge revenue, and I don't know. Well, it's going to be a bunch of lumbering behemoths, and hopefully we'll be in the right one. Justin Babish, I don't like the idea that a call for a vote would deliver many time multiples of share. That's the problem with the current system. It's not one share, one vote. It's, it could be 20 shares, one vote. But the manipulation is behind the scenes. And I'm sure they justify it. They receive all these votes. I guess you see some accounting for it, but they receive all these votes, and they rule the count correct. But I think it's opaque. I don't think it's clear. And it's a real problem. Governance is one of the first and ongoing casualties of this new system. So the governance of almost every company in the United States is with the huge pools of money. The Goldman Sachs, the Finks and the Blacks and the whomever else, the Cohens. It's not with shareholders. So it's an enormous problem, but no one cares. No one cares. Exactly, Justin. It's not right, but I don't know that it's going to be changed. Ward Richardson, William, the last PR was on Thanksgiving holiday. Tomorrow is Martin Luther King holiday, just maybe. Yeah. Is Canada open for business tomorrow? I need to check. Yes, Canadian markets like the Toronto are open tomorrow, Monday, January 19th. 9:30 a.m. to 4. It's our U.S. holiday, Martin Luther King Jr. Day. It does not close Canadian markets for now, but when Canada becomes a state of the United States, the Toronto Stock Exchange will have to follow U.S. holidays. Canadian markets remain open. Justin Babish, Ward said weeks and months ahead. My smart ass off the cuff remark is, last year RT announced the AIP deal coming weeks and months ahead. I'm not sure they said that. Are you sure? I think they said weeks. I don't know about the months. But anyway, your point is the same. My changing it to my memory doesn't change your point. Why did the AIP deal take so long? 1, negotiation. 2, valuation. 3, negotiation. 4, the stock price collapsed, so further negotiation. 5, I believe law firms delays, which might be supported by the criminals. 6, regulatory delays, maybe interfered with by the criminals. And 7, that entire time frame, nothing could be talked about. It's my opinion they could have closed the deal. I guess 8, we just have to admit, AIP was run by a professor, Dr. Tom Core, smart as hell. But how good is he at calling 100 people to get their signature? Sometimes you're overqualified for the shite-ass job you have to do. So that was the delay. We know that the strategy of the program computer sellers is to destroy the price of the stock so the deal breaks up. And therefore, if the deal goes forward, they have to issue a whole lot more shares, so that helps the shorting. If the deal breaks up, the stock prices collapse, that helps the shorting. And if the stock prices collapse, then the company is suddenly left with a funding need. You go to Canaccord and they fund it with a toxic deal that looks like a lifeline, but is instead a noose. And the ongoing destruction of an entire market cap, a theft of an entire market cap occurs. Well, that didn't happen here. But those are the things that delayed it based on the February 8th press release. None of that applies anymore. None applies anymore. They closed the deal. It's debatable. Would they have closed it for fewer shares without the interference? I don't know. But the denominator is knowable. And it's fine. Whatever they paid is fine. The company doesn't need a toxic deal. Yes, the stock price is down, but they're not going to do a financing at these levels. If it were Brent's son, they would. But Corey Brandolini is not going to do a financing at these levels. So your point is, if, let's say, TELUS and Railtown jointly announce that, I don't know what it's going to be. Let's make it up. We're open for business and rah, rah, rah. Here's our promotional website or something, and they turn it on. Your argument is from that point onward, there'll be no news. Hush, no news. From that point onward, there'll be no buying. You can't buy because that's material information. That's your point. And also that the suppression of the stock price by the system-wide criminality is going to continue and overwhelm anything good. That's your point. Well, I think you gotta, I mean, I can understand the muscle memory, but I think you gotta put the frontal lobe of your brain in charge, I think, and you gotta take out a pad of paper and write down once TELUS Railtown announce whatever they announce, it might be the only thing that needs to be announced that sets up buyers, that sets up research. You write that down. Secondly, that once they announce this, revenue is going to scale. How do you know that? NVIDIA can scale. The data center can scale. That's in everything out there that you can read. You have to trust that Railtown can scale, but we have evidence of that. And we've have some statements of that in their own promotional materials, but you got to believe that. You write that down. So you know that the news, unless there's other news that has to come out, is going to unblock this blackout. You know that revenues are going to start scaling, potentially. And then thirdly, you know that research reports finally will come out. How are they going to suppress all that? I don't know, Justin. I don't get, I get it, the anxiety of all these stocks, but this is why we can't be in these manipulated stocks anymore. And so you go from having a very logical assessment of it to this sort of primitive part of our brain, all fright and fear. Well, they got it down before, you know, G-Bucks was supposed to buy a gold mine. GTII was supposed to buy a law firm. It's all crap. That kind of thinking, I submit. I get it because I go through it, but it's not useful. It's not right. So you got to bury all that emotionalism and that fear and that reptile part of our brain. Hey, we experienced this before. They're just bullies. Bap them in the nose, and they suddenly become pussy cats. So, Justin, pick a side. Take a pad of paper out tonight or tomorrow morning. Why did the computers have the ability to sell off? Because there was no news that mattered. Why did the computers have the ability to walk the price down? Because there's material, non-public information that still hasn't been disclosed. All right, write that down, and then write that if TELUS and Railtown do disclose whatever the hell it is, you can only say maybe that checks it off, because there might be something else. We don't know. But you do know at some point they're going to release all of the news necessary to lift that boycott on buying, or whatever the hell you want to call it. Write that down. 2, write down revenues. The last year, there have been no revenues. And you can write down your reasons. But if they are announcing that the TELUS data center is going to ramp up, NVIDIA, 20 billion in revenue TELUS has, and the CEO is saying that he expects revenue from AI-enabled technology. What else could it be than the data center? But it could be other things. Write down that risk. Is going to grow to $2 billion by the end, in 2 years. Annual recurring revenues, $2 billion. Are the computers programs going to be able to change that fact? And if you don't want to believe 2 billion, pick another, a billion, pick half, pick 100 million, pick whatever the hell you want. But know that when it runs through the data center, it runs through Railtown. Now, why are they going to use the data center? Canadian, right? A second point. Third point. Canadian sovereignty. Cheaper electricity by half, I think. Hydropower. Modern capacity. Write all that down. So once they start ramping, people are going to move there. And it's going to go through Railtown. Unless you don't believe it's going to go through Railtown. If you think it's going to go through Langchain, then cross that option off. But then go to your 5th point. Once revenue starts ramping, are people going to know about it? Railtown's going to know about it. TELUS is going to know about it. I would argue NVIDIA might know about it. Microsoft certainly is going to know about it because Railtown's technology is embedded with Microsoft or vice versa. But you may or may not believe it, but revenue is going to ramp. How the hell are the algorithmic program selling computers going to counteract that? I don't know. And then maybe your sixth point, when do institutional buyers, family offices, mutual funds, retirement accounts, other institutions, ETFs in Canada, when are they going to be able to start buying? And how much money do they have to buy with? And maybe as a corollary, what if one or two of those institutions, I can give you a couple of names, John Ruffalo founded Omer's Ventures. John Ruffalo founded Mavericks Ventures. And he just funded Mavericks too. Omer's, Mavericks. What if they each wanted to buy 5% of the company? What would that do to the stock price? You can write that down. You may believe nothing, that the computers are going to just keep selling stock and it's going to be a spinning wheel for the rest of time. Write it down. Write it down. Good versus bad, pro, cons. Just write it all down. And then write down you could write down risks. What if the data center blows up or there's an act of terrorism? What if Railtown's technology has not been battle tested and all along we've been lied to? Write that down. Write everything down in a list and then risk it. Risk it. What are the odds this is the case? What is the odds that's the case? What is the odds that's the case? And I guess as my final thing I would write down is, what do we know about revenue? We know that the AIP network is going to move 100 million plus to TELUS. Why? Two reasons: Canadian sovereignty and Railtown controls the network. And according to Dr. Tom Core, that was just 125 of the 200 companies. So it seems reasonable that 100 to 150 million over the next 2 years annual recurring revenue will move to TELUS, and they will have a revenue split. Now you have to assume you're split. I picked 20%. Frankly, I think 10% is too low, and it's easier arithmetic than 17.5 or 22.5 or 16 or 24. I just picked 20%. So 20%, I would project over the next 2 years, because it's a growing revenue spend and it's more companies, I would say 150 million from that. If you choose to believe the CEO of TELUS, or you want to believe that the shorts can continue to do this, write it down. Give it probability. Me, I give the probability very high that the CEO knows his own business. But you might give that 0. Do it yourself. But the CEO says that in 2 years, annual recurring revenue from AI enabling technology at TELUS will be $2 billion. I read that data center. I risk it by 50%. Instead of 2 billion, I only assume 1 billion. But maybe you put in 2 billion. Or maybe you say, that guy doesn't know what the hell he's talking about. Those automatic computers know what's going on. The market knows what's going on. Maybe you give more credence to Dennis Entwistle doesn't know what the hell revenue is going to go through that data center. And maybe you have risked that the data that goes through that center is only going to be 10% through Railtown and 90% is going to go to Langchain. There's no evidence of that. The only evidence I see is Railtown's it. But you got to risk that. So my way of risking it, I'm not taking 2 billion, I'm taking $1 billion. Maybe that's the wrong risk. That's the one I took. So 1 billion plus 150 million, 1.15 billion in revenue coming through the data center, being shared with Railtown. I give that being shared with Railtown a 95% probability. You might risk it differently. But anyway, 1.15 billion coming through at 20%. $230 million in annual recurring revenue, visible for forward 12 months, and there's 215 million shares outstanding, fully diluted. It's $1 a share. Now, another assumption I make is it's 100% gross revenue is 100% net revenue. Gross revenue is 100% cash flow. Gross revenue is 100% profit. Over $1 per share. Visible as forward revenue during the next 2 years. You may not agree with me. You may say, yeah, Dennis Entwistle says 2 billion. You're saying 1 billion. I only want to go to 100 million. Okay, fine. 100 million goes across Railtown. You add 100 million from the AIP partners. You assume some growth, and maybe you can concede that over 2 years, the combined, just the companies using it have growth, and it's 300 million. And you take 20%, that's 60 million a year in free cash flow profits. I mean, I think that's as low as one can assume. But you may not. You may want to be more negative and believe that the computers can suppress the price. But 60 million in AARV divided by 215 million shares, it's 28 cents a share. That's right where the stock's trading. You get to buy, I think, even in the most dire interpretation of publicly available information, but you've got to connect the dots. You get to buy this stock right now at the price of 1 year's annual revenue per share, 1 year's net revenue per share, 1 year's profit per share, 1 year's cash flow per share. And that's what you're paying. But something tells you that somehow the computers can suppress that. I don't know. I don't know what to tell you. I do not know what to tell you. The difference between this and a G-Bucks, every part of the story of G-Bucks is let's put some ideas out there, see if it sticks, and we'll pay $5 million to a guy in the Caribbean to turn on the computers. We'll put up 30 million so he can have some money to trade with, and we'll try to get the Charm Boys to get the stock up, and maybe it'll catch and it'll squeeze. That's not the story here. It's not the story here. This is a bona fide data center about to ramp up revenues, and in my mind, the only interface is Railtown. but risk that. If you think these other names I just showed you, if you think Langchain's going to be in there, if you think Colonel Corn is going to be in there, if you think some other thing's going to be in there, risk it. I don't see it. Why? Sovereign Canada. Sovereign Canada. But risk it. If you don't believe my 20%, use 15%. Hey, bloody hell, use 1% revenue share. Do you think Railtown would be doing this for 1%, 5%, 10%, 15%? I don't, but use it. Just write it down rather than having these fears, and then write down why was the stock under pressure, even though I was positive and wrong all this time. There's been no buying. Why hasn't there been buying? Because there's material information that hasn't been disclosed. What is that material information that hasn't been disclosed? Most likely. Most likely, it's the revenue deal with TELUS. What are we waiting for? Well, TELUS opened up in May, I think, this data center. Maybe TELUS was doing trial runs or dry runs or soft runs of the NVIDIA hookups, the hydropower hookups, the fuse boxes. Maybe they were testing every scenario. The St. Lawrence Seaway freezes over for 2 years, or a bunch of protesters surround the gates. I don't know, whatever crisis they want to test, they've been testing it all along. Maybe they've tried to select who is their large language model. Is it Cohere? Is it OpenAI? Is it Agenic? They got 3 customers. They're running the 3 customers, you can Google it, through there, the healthcare and a couple of others, and just making sure that the data center doesn't have any kinks. It is ready to scale. And maybe, having selected Railtown, they said, this is what we need. We need a data search application. Well, that's easy. We already have Railtracks. It works all the time. All right, let's see how it works. Now that we have 3 customers, their data's in there, let's see how that works. We need an observability tool. Yeah, we're ready to go. We got the best one on the planet. It's called Conductor. We just finished it, this whatever iteration. All right, now that we have 3 customers there, why don't you go in and see how that works? And we also need a real time. We're getting a lot of demand from applications that have to react in real time to information. So we need a real-time data processing engine. Well, that's amazing. We have been working on Rail Engine for 2.5 years, and ours kicks butt. Well, when's it ready? Well, it won't be ready till the end of January. Well, all right. Is there any way we can test it before then? Yeah, we can run some scenarios for you, but we expect it to be finished, as we announced publicly that it'll be finished at the end of January. Does that change any facts on the ground, Justin? I think it does. So let's say it's the beginning of February. Well, what might happen is maybe they got to run all sorts of scenarios, test it, let's say for 2 weeks, 4 weeks, 6 weeks. And then you start moving away from my optimism that something's going to happen in the first quarter, and it might be the second quarter. Sorry about that. It's, you know, it's like waiting for the Superman X-ray glasses when you were young, and instead of 2 weeks promised, it took 8 weeks. Sometimes it happens. But these facts are different than what were known February 8th. I know it's a pain. It's awful. It's awful to think that they made this announcement February 8th, and we're a year later, and the stock is cheaper than it was. And I'm an asshole. I'm totally wrong on all my timing. But what are the facts? Write them down instead of emotionally processing it and processing it by the stock price and the red, 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 red. Write it down and put some probability. Use a star calculation or a percentage calculation. Come up with your own sense of it. My sense is you're buying this stock in the worst case, 1-for-1 with projectable profits per share. You're paying 1 time, the absolute worst case, in projectable revenue. 1 times is what you're paying. It's future, that's for sure. There's execution risk, that's for sure. There's the risk that there's something wrong at NVIDIA or something wrong at HPE or something wrong with hydropower or something wrong at Agentic AI or OpenAI or Cohere, that there's the potential that everything we've been told in public information, Corey's an asshole, Marwan's a lying son of a bitch, and all the engineers are they're all fake engineers, and it's all been a con job. And William's getting paid under the table like Double D, and he's going to walk away with $1 million, and he's doing it on purpose. You can write all that down on your list too. But good Lord. Why would you say weeks and months ahead compares to weeks? I'm not sure that's what the press release said. Weeks and months ahead. You can't, because of muscle memory, emotional memory, you can't accept that you have information that's public, that the facts have changed. You can't accept it. I don't know. The only thing I can say is write it down. Write it down. Take a yellow pad of paper, write every point down, every fear, every risk, every hope, every news announcement, every addressable market size, everything, right? You don't even need any reference material. Just do it with what's in your head and write it all down. And one by one, write the risk of eventuality. And go from there. But I think if you think that Ward's prediction of weeks and months ahead, and I think that's right. It could happen as soon as weeks, but I think it's more likely months away. But good Lord, you guys, I know, I feel badly. You guys have never experienced a transparent, fairly run market where there's a level playing field. You've never experienced it before. And it's not here right now in Railtown. But if revenues start becoming predictable, projectable, predictable, and repeatable, and growing, to research analysts, to the data desks at hedge funds, and to the investment committees at wealth advisor and mutual funds and research departments at brokerage firms, they're going to discount that future production to today. And you won't have time to ask your questions before the stock, and I'm not picking on you. I'm just saying, if that all happens, you're gonna be amazed, I think, in how quickly the stock snaps upward. This statement of yours makes absolutely no sense. The rest of yours have. But this statement reflects your experience in stock after stock after stock, where you've been told a bunch of hogwash and it doesn't come true. So you're analogizing this stock to that. But there's no question. I mean, you should write down as well. William was excited about this stock 14 months ago. William was calmed down. I think you have to accept that I calmed down on it for January, February, March, April, and even May. I didn't really talk about it. I don't know if you factor that in, but it is true. 2 Novembers ago, approximately, I thought it was a good idea. But then you factor in that I said in June, we don't have much time, and I kept saying that, except for August, right through, I guess, right through now. You got to write that down. Is William full of crap? Does he have any judgment? Should I cut him off because his so-called inside information sucks? I don't have inside information, but he's just flying blind. What an irresponsible. He's no different than Ham or Frank or I can get better information from people who play poker down in Puerto Rico. You may write that all down. But I'm telling you, Justin, this kind of thinking on your part, number one, it's not thinking. Number two, it's going to drive you crazy. It's just going to drive you crazy. I used to tell people, and maybe it's your case, Justin, if you have these kind of worries, maybe you own too much stock and maybe you got to put it elsewhere. But my problem is I can't tell you an alternative. Silver has gone up by triple. So it's not even a hedge anymore. Well, I think it's a hedge if you take a long enough time frame. But if you're a pussycat about Railtown, you're certainly going to be a pussycat about silver at 90 if it corrects to 40. And to me, I'd be saying, oh my gosh, what a great opportunity to add. But a lot of investors say, William was wrong. It's asking too much of the market or of predictions. It's just probabilities. But I think in the long run, silver is an excellent hedge. But in the short run, silver might do the exact same thing to an investor that Railtown's done. Get crushed by the shorts. So I can't tell you to move your shares from Railtown to silver, because silver it might be whipsawing you. Can I tell you to go into what AI stock can I tell you to go into other than Railtown? I don't have one. Cohere is $160. Microsoft $471. Call up a wealth advisor and see if you can invest in the Sequoia Trust AI Trust number 5. Good luck. I can come up with a few mining shares that I think will make a good investment, but they have the same volatility that Railtown's had. Have now people are pissed off at me because they can't stand that it didn't go up in September, October, November, December, and now it's January. And I get it. I've been wrong, but Nobody picks the bottom. You got to check the story. And what are the probabilities in that story? I submit to you, Justin, what's different now versus February 8th. They closed the AIP deal. AIP, I hear from here. People have said here. AIP brought TELUS. I have no way of knowing that one way or the other. AIP brings $400 million in revenue to roll up. By owning AIP, Railtown controls its own destiny in that undeniably, if they bring revenue to the TELUS data center, they're going to get a revenue split. It's in the press release. Bring 200 million times 20%. It's 40 million in annual profit going on forever. What's that worth? A lot, just from that. So that's all different today than it was before. What isn't different is there's a news blackout. There's a buyer's blackout. When does that end? I think when it ends, it may be 48 hours, maybe 72 hours, maybe a week while investment committees meet. But once it ends, it'll be for the rest of this investment's life. And the buying's going to change the story. But you may not believe that. You may believe the sellers, the heaviness can outsell Mavericks, Omers, Fidelity, TD Bank, retail, whale, maybe. That's to be determined. I think the difference between today and February 8th is TELUS. It is TELUS. If I had to summarize this investment now, it's TELUS, TELUS, TELUS. It's nothing else. But TELUS didn't exist a year ago. The denominator has not been destroyed by the criminals. Maybe it's a little bit higher than it otherwise would be, but not much. But it's knowable. So any Wall Street person, whether a wealth fund, an advisor, an analyst, a private equity guy, venture capital, can look at the projections, whatever she wants to say they are, and she can divide it by a known, knowable, unchanging denominator, the number of shares outstanding. And yes, that can change from time to time, but it cannot be changed by the criminals. They don't have a big slug of stock sitting at the transfer agent that they can manipulate downward by always selling it down and then putting their exercise bid on the trailing 5-day, the lowest 5 days of trading over the trailing 20-day VWAP. None of that. But your emotions, your pain, your experience, the flight or fright part of your brain, we all have it. I have it too, late at night, or even as I'm talking to you guys. That's why what I do is try to sit down with a new sheet of paper. Every single time I have a little anxiety with a cup of coffee, and I write down my targets. I risk them. Well, what happens if I'm totally wrong? What if I'm totally wrong that Dennis Entwistle knows what the F he's talking about his own customers. Maybe he's just a Canadian who makes things up. He's a hockey puck. Okay, so let's assume there's zero business coming from TELUS. Zero. We'll just assume zero. Well, so what business do I know of? I do know that AIP is controlled by Railtown now. And I do know there's 200 companies approximately. But according to Dr. Tom Core, of course, I got to believe him. But and he's believable. But in the interview, he said over 100 million out of 125 companies. So I have pretty good confidence over a 2-year period, they can move that revenue over from 125 companies. And my guess is when you see the growth rates in the AI software companies, my guess is it'll grow from over 100 million to maybe 150 million on an annual recurring basis from those 125 companies. My risking is I'm leaving out the other 75 to 100 companies. I know that's going to happen. So if I use if I use a revenue split of 20, that's 30 million a year. Dennis Entwistle, CEO of TELUS, doesn't know anything. He can't even read his own data sheets. He got there because his father owned the company. He doesn't know what the hell he's talking about. But I do know that we've studied and kicked the tires quite a bit on the AIP. So that's 150 million times 20 is 30 million a year in ongoing growing revenue. What's that worth? 10x? 50x? At 10x, it's worth $1.50 a share. At 50x, I suppose it's worth about $8 a share. And I'm paying 28 cents for the stock right now. So what am I worried about? Well, the shorts, last time somebody mentioned weeks and months, it took a year. Yeah, I can't do anything about what happened. But I can try to convince you that just because it happened in the past doesn't necessarily mean it's going to happen now. But you got to convince yourself. The other thing you can do is sit down and write in multiple projections, like on that 30 million. You could put the Lang chain multiple on it, 80. I think it's a little bit too high, because if you're only using the AIP network revenue, it could double from 30 million, and then it's going to grow. I don't think at 80% a year, maybe. But anyway, you could use 80 just to compare it. You got 2.4 billion from that. You got $11 a share. You want to risk it? Take 2/3 of it away. Discount it by 66. No, hell, take 75% away. Discount it by 75%. You got a $2.79 target. You got 10x from here. But I don't know what you're looking for. I don't know what you're looking for. Maybe it's that you need instant results, which I don't blame you for that. I know that whole road. You're not the only person with that, by the way, Justin. I think I've been judged on short-term results, which are impossible. It's like going to an astrologist who says your wife is going to cheat on you by October 30th and your marriage will be destroyed by November 15th. And October goes by, November goes by, nothing happens. But maybe in February it happens. I don't know. It's a bad example. But you're going to drive yourself insane with some of these. To me, that's a non sequitur. It's a non-thought, and it's a fear rather than a thought. So you just got to write them down. You got to write down every scenario. And I think the best thing about Railtown right now is a lot like silver when it was $20 and $25. Even if any stock can go down at 26 cents, Railtown could go down to 13 cents. But it's in a day or a week. But it is virtually impossible to write up a scenario where it stays down. An asteroid could hit. World War III could start. The capital markets could close. Microsoft could find, the Epstein files come and the women go after Bill Gates and he has to sell the company at fire sale prices. I don't know. You can make up all sorts of worries. But it's virtually impossible at this point to believe that Railtown, which according to Yahoo is like a $35 million, whatever it is, it's just my memory. Call it a $40 million market cap. If the stock price went down by half, it'd be a $20 million market cap. I would submit to you that the entire market cap of Railtown right now is equivalent to the cash flow forward 12 months that they're going to generate just from the transfer of current spending of the AIP partners to the data center, something they control. Maybe you think that the stock price is telling you something. I don't, but a lot of people do. A lot of people do. I've been asked, when am I going to give up on Railtown? You're not listening to me. And I guess I didn't listen because I guess the real point was I'm giving up on Railtown and I'm giving up on you. But I think if you take a pencil or a pen and a blank sheet of paper, write down all your fears, write down all of my projections, write down all of your projections. You don't turn your computer off. You don't need anything. You know the outstanding shares are 215, fully diluted. You know that. Everything else you can do from memory and risk it all. I think by the time you're done, you're going to find out that 26 cents pretty much has put every risk you're thinking about into the price. What it hasn't put is upside. And I think from here on out, the surprises are to the upside. All right, I'll go through these, but I can hear them cheering football, so there must be some football on. Justin Babbage, sorry, just popped in my memory. Yeah, I get it. I deal with it too, because the fear is like electricity. Irrationality is like electricity among human beings. Why? Because we are animals. We're hurt. We got to protect. And we learn to survive in groups. But it's hard to be contrarian. It really is hard. You lose a lot. And people test you minute by minute and extrapolate that to everything. And that's life. It's just life. Day by day. And I've been wrong, Justin. Frankly, I've been wrong. I thought Railtown was a great opportunity 14 months ago as a simple, they've created software that's ahead of the game. Microsoft is one of their partners. It's cloud-based. They're proving up customers. To me, back then, it was a story that obviously Microsoft's going to buy them. But they need AIP. That puts in a long winter on buying and information that we've survived, but barely. And it changes the game. Now you've got TELUS as a buyer, Constellation Software, NVIDIA as potential buyers. You got a bunch of potential buyers. But the story's changed because of TELUS, because of all the things I went through. It's completely different. And is the delay worth it? Well, in my case, probably not. I don't have a big account. It's my stubbornness and in general being an asshole has cost me pretty important relationships. But it's not about me. It's about put a pen and paper down. Is AI real? Are data centers real? Do all of the apps that were created using SDKs in the world on mobile, on iPad, on your computers, do all those apps have to be replaced with ADKs? Upgraded with ADKs? How do ADKs work to the companies that create AI as a service for their clients? How does the software, the compute power, the massive compute power that's now available because of NVIDIA and these huge data centers, how does that compute power get translated to the ultimate user? It's the compute power, it's the electricity, the hydropower, it's the NVIDIA chips and the HPE on the bottom. In the middle, it's a language model, whether it's large or small or something different. Railtown is completely agnostic as to what that is. What we know is Cohere's Canadian, there's Anthropic, and there's OpenAI. So that takes care of itself. It's not our interest. And then the next layer, basically the bottom is your I don't know if it's subconscious, but the bottom layer is all the data, all the information. The models are about synapses and neuron networks. And when I say Hail Mary, you might think immediately of the Virgin and the Mother of God. You may think Miriam from the Quran, or you might think about Doug Flutie's Pass, or you might think about strategies in war, or you may think, you know what, I don't get. Why do Catholics like Mary? What does that have to do with anything? Or you might think about Queen Mary, or you might think about, your brain just goes connecting all this stuff that resides down here. As soon as you hear that, you have all these connections. But then whoever brought it up follows up and says, what is that prayer? And your brain goes, the Memorare. Or what's that opera song? Ave Maria. What is that song? It's the Hail Mary. So the instant connections, that's the language model. The part that reduces it to what's important, basically, is the orchestration frameworks, the ADKs. That's where LangChain and the rest of them are all competing. Google ADK. Is it going to be the way it's going to be in 5 years? Hell no. It's going to be changing like crazy. I mean, I remember when people had cameras. Now people ask if you could take a picture. Yeah, do you got your phone? It's cuckoo. I bet in 10 years these mobile phones don't even exist. Things are going to change. But in that context of change, if Railtown can prove its concept on a data center as that final process that's the link between the user, so the user gets not only data, not only neural connections, but useful use of that data, whether it's in a presentation or if it's in real-time processing, and there's an observability tool that keeps the toddler from walking to the top of the stairs. That's Railtown. Is LangChain there? I don't think so, but we'll find out. Luckily, the market is so big. I showed you earlier, remember 30 billion as the addressable market. Take 30 billion. Pick a penetration number for Railtown. 1%? Okay, 1%. There's only 2 competitors we know of that are, we know one and the world knows the other. Google ADK is in its own space. And then there's some of these others that I just read to you. But let's just say that because of all those competitors, Railtown gets 1% of the addressable market forever, 300 million a year. If you assume it doesn't grow, it probably doesn't get a huge multiple. Maybe a finger motion multiple, 2 or 3. Maybe it's worth $1 billion. But if that grows and it has growth projections and it's 100% margin, 100% profit, maybe it gets 10x multiple. 10x, that's pretty low. You could, average software is 25, 20, 15. How about if it gets 15x? It's 4.5 billion. 10x is 3 billion. That's 1% penetration. 10x is 3 billion. 3 billion. Works out to $14 a share, which I'm starting to think is a buyout number, right around $15. I hope it's higher, but just sort of just a normal process, I'm starting to think around $15. But if there's a bidding war, I think it could go over 50. Anyway, let me move on. I'm being a jerk. I don't mean to, I'm not addressing it at you. It's just this overwhelming fear and anxiety, which I get. I was wrong. Blame me. I was wrong in my timing. Flying blind, as I heard it described. I don't think so. I think what I'm suggesting to you, I did over and over again with the information I had. Unfortunately, we don't have that much better information than we did before. But I'd submit to you, I don't know about night and day, but it's dawn versus night. I'll put it that way. Ward Richardson, IBM is making a strong comeback, and NVIDIA has strong partnership with them. Yes, I agree with that. Justin, I would hate to accuse Canada of not respecting MLK Jr. Day because they're insensitive. Well, I didn't say that, but I happen to think when you consider that he died, I think at age 36, Martin Luther King is one of the great heroes in my life. And I know it's trite to say that. He's probably a hero to most people, but what a truly great man, truly great man. And I think he knew the risks he was taking. He knew the oppressor was as trapped by slavery as the oppressed. He knew the oppressor was I don't want to say suffering, but it's the only word coming in my head, as much as the oppressed. The jailer was as jailed as the prisoner. Ward, I didn't know that about IBM. I feel like a dumb money in this live chat. Come on, RT, Daddy needs a winner. Justin, I set off the copper mount. No. I get it. I didn't address anything directly at you, Justin. You're a good investor here, and a lot of your points are great. It's just you're going to drive yourself crazy. On the other hand, you may think that I should be looking in the corners for more threats than I am. Look, I wish I had seen that it was going to go from 45 to 25. I wish I had seen it. I feel a little bit left in the dark, maybe, but I'm not sure it's anybody's fault. And maybe it was me getting ahead. I don't know. I don't know. Just wanted you to talk me back off the cliff. Thank you. I feel better. Well, that maybe I did something. Maybe I did something good. I don't know. But Justin, your points are. It's not that your thought process is crazy. I think it's normal. And I submit that it's what the bad guys count on. But also, those warning bells would have saved you, should have saved me, for example, from GTII. I told you I called him and I said, this doesn't feel like this deal's going through. And I think the stock was $1.60 or $1.62, $1.52. Oh, no. I just talked to so. It's going through. Don't worry. 2 hours later, the stock was 20 cents. See, I should have trusted that. So, your instincts and your, sort of warning bells have a real purpose. They have a real purpose. But the only way I know to counteract it is to try to write down what we know as best as possible, because we don't know. There's so much we don't know. And try to rationally think about the odds. And then you can be severe to them too. Like on my you can chop all of the estimates. And to me, Railtown right now is priced as if it's going out of business, or if it's going to be seller boxed like MMAT. And I just don't think that's the right playbook here. Donna M., good afternoon, William and everyone. Ward says hello to Donna. Donna says hello to Ward. Ward and Donna are both excited. Justin, actually, when it comes to figuring out percentage for revenue share, did we try how much does TELUS charge for compute versus how much Railtown normally prices products? I think I know what you're asking, and I've tried to think about it. I don't think it matters. I've shown you, just like LangChain, Railtown has this screen where you can click basic, pro, member, expert, whatever their choices are, and you can pay a certain amount per month, just like LangChain. It's all the same way you sign up. I don't think it's going to matter, because I think TELUS is going to charge what TELUS charges. And, I'm making a big assumption, and so you're right to question it. I think TELUS is going to automatically make the choice for the user that they go through Railtown. Now, I don't think that the user has to use Railtown. They could use AWS or LangChain or I don't know, Microsoft Azure. That doesn't change there may be other revenue arrangements in those cases. I still think we have to find out the deal, Justin. I still think Railtown gets a piece of all of that, but maybe it's not as much. Or if someone uses a different hyperscaler but chooses Railtown, I think Railtown's going to get pieces of that. When I do my revenue analysis, which I admit is weak because we don't know the numbers, I only focus on the TELUS and the AIP. I leave out Uniserve. I leave out all their other ability to earn revenue. I leave out the ability to roll up 400 million. I leave out their ability to go host at Bell Canada. I leave out, or whatever it's the host is the wrong word. I leave out if they get a deal with, the Rogers Communications data centers. Why? Because we don't really know about any of it. And two, that's all upside if I leave it out. The key here isn't the revenue. The key here is proving the concept. And you just, I know you've never seen it before. If Railtown is able to prove that their, for lack of a better word, their interface between the user and the giant computer called TELUS Data Center is critical and is great, the upside is they prove the concept, and you can take it from one data center to 20, to 100, or more. And then it doesn't matter what Railtown's revenue compared to that revenue. What if Microsoft, I think TELUS is already, to use a word that's probably wrong, is already bundling Railtown with the TELUS solution. But I think probably developers can choose what they want. That's going to be my guess, but we have to find that out. So maybe they say, I don't really like Railtown, but I do like their idea of rail engine, but I'd rather use LangChain, whatever, pick and choose. That may happen. But I think the majority of people, but remember, I went 50-50. I didn't say the whole 2 billion. I only used 1 billion. But then you could argue, well, that's too high. I don't know. You can go insane. You got to pick something. And I use the billion. I come up with $1, but you can risk that. Cut that in half. It's 50 cents. Cut it by 75 cents, 75%, and it's a little over, because it's actually over $1. It's a little over 25, 26 cents a share. That's where the stock's trading. You can overcomplicate this. But ultimately, if a Microsoft were to buy Railtown, based on one data center or two, and Microsoft brings it in-house, so they own it exclusively, and they go to the 200, that doesn't sound right. I think Microsoft has over 400 data centers worldwide. But I was about to say they have 200 in Canada. Maybe they have 200 in North America. But they could take the Railtown, after they buy Railtown, Microsoft could bundle it in their DevOps, their Azure, and their GitHub. Guess what? Railtown's already there. Railtown's already there. But if it's proved up, the proof of concept at TELUS, or for that matter at Uniserve, and Microsoft buys them, Microsoft can pay, I don't know, 40 billion. And I know that's a Arseholian number. They can pay 40 billion. But they can bundle Railtown into, Microsoft controls the software developer tools market. They can bundle it in with all their software developer tools, and I don't know. I'm making it up now. I'm beyond the ability to calculate it. But they might be able to create $40 billion a year in bundled revenue ascribable to Railtown after they bought it for 40 billion. And what's that worth? 40 billion and growing every year for the next 10, 20 years. What's that worth to Microsoft? 5 times that? I don't know. I don't know the multiples. In oil and gas, you would pay 5 years of reliable revenue with long life. You'd pay 5 to 7 years for it. 200 billion? I don't think your attempts to calculate this, like my attempts, are going to matter once Microsoft comes in the bidding. And I might be being too cavalier. I might be. I might be. What are the prices? I don't know. Thank you, Justin. You used to warn us about volatility and make the example if we waited to buy until it was proven, then it went back down. Well, that's what I think about silver right now. Silver's $90. It may go to 150, but and maybe it goes without pause. And silver might go to 1,000 if it becomes unattainable. But I also am aware the empire can fight back, and it goes to 45 briefly. But if people don't have a stomach for it, they get shaken out. Railtown has done the worst case. If you bought it at 60 cents, what's worse than it going to 25 cents? Well, I guess I don't want to challenge. It could go to 20 cents, I suppose. But it's essentially done. It's given its worst case, which is discouraging. But like I say, Justin, I think the surprises are going to be the upside in Railtown now. Everyone has written it off. This is disaster. It's going to be, it's going to, Lang Chain's going to beat it. No one cares about it. If it's so good, why aren't they buying? No one really in their heart wants to believe some of the rational story. On the other hand, to their credit, there's so much of the data in the story we don't know. It could be that Corey and Marwan are naive, and the AIP guys were correct to take as long as they did, to pick the wrong attorney, to get. I swear that deal could have been done 4 months earlier. But maybe it's Corey's fault. And maybe that translates into that's why the stock is where it is, not the short selling. Maybe the short selling, and it should be called more than short selling, maybe somehow they've sussed that this company deserves to be flat on its ass. I don't know. I don't think the evidence says that, but I tell you what, 19 out of 20, probably 49 out of 50 times in these low-priced over-the-counter stocks, if you go negative, you're going to be proven correct in the long run. So you stick like Tony the Turtle with AME and GMC, and you're wrong for 4 or 5 years, but you keep helping the people either knowingly or unknowingly you work with. The shareholders don't make any money. I don't know what to tell you. Justin, at least now we can ride the volatility with more comfort. Maybe. Look, Justin, on a given day, they can bust through. They could try to bust it through 22 cents, 20 cents, just to see if there's any stop limit orders down there. And you could have a hell of a painful day. Any given day, a stock can go down. It's just life. But I think you're right. I think the volatility is going to be to the upside. But they'll fight. They're not going to give up without a fight. Anyway. Hey, Red Pepper Ronnie, how are you? Hey, Rapper Ronnie, rewatch. Taking down Christmas stuff. You better watch whatever football's out there. Michael Lonsky, maybe this is our week. It may be. Look, it's 4:30. I gotta get ready to go do. David Hensley, 13 to 15 cents is music to my ear. Well, that's going to be, David, that's going to be the other thing. They wear us out. So if we get back to the red, to the green, some of us might say, I'm just going to sell. But where are you going to put it? That's the thing. Where are you going to put it? Cash? Somebody was talking about the baseball salaries. I'm not going to be able to remember the numbers. But do you know, just from 2015 to now, the equivalent baseball salaries are massively higher just on inflation? Cash isn't a cash kind of, I don't know. By the time you're done listening to me, David, you're going to start measuring your wealth in cycles and in silver or property or apple trees. I don't know. But I'm going to sign off. I was on longer than necessary, probably. I appreciate that you listened. I've got to get ready to go, and I don't have much time, so I need to sign off. Next live, teach us to read filings. Well, the most recent filing that has some relevance, which unfortunately I have to go find. Of course, I won't find it quickly. Never do when you need it. There, maybe that's it. Maybe this is it. But filed, oh, that's December 5th. But anyway, I thought it was filed January 8th. But anyway, that's how many shares are outstanding. And then working on rail engine, expected to be finished end of January. So I think this is why everything slowed down, not so much AIP. And I never even heard of rail engine unless it was one of the other products. They just changed the name. They only have 1,200 users. That's up, but that's not that great. But I think the key is this right here for the data center. And that filing you could have found if you go to the Canadian Stock Exchange, put in Railtown, scroll down, you can see that filing. It's a monthly filing to the Canadian Stock Exchange. Oh, it doesn't have to be rail. Well, the best place to go for filings in the United States, if you go to the over-the-TC markets, which I hope we get away from, or NASDAQ, usually when you get a quote, you can there's a column for filings. That's one way to do it. I don't know if that's true on Yahoo because I don't remember the last time I did it that way. But the simplest way is Edgar, EDGAR, which I used to use. I used to walk up to the SEC and have to show my ID and go in and find prospectuses and Xerox them and send them to the client. But now you just go to Edgar, and you can find it just by Googling the SEC filings. And anyway, Edgar, you hit Edgar, you give the stock symbol, and you have every filing there that you can ever want to see. And it takes a while to learn. I learned a lot reading the paper prospectuses. I'd rather read a book than an iPad, but you just read them. And if you don't like balance sheets or income statements, I like reading those, but I admit I don't trust them because there's games that accountants can play. And, I try to remember the accounting I learned, but I didn't study to become an accountant. And I think some people who are accountants have an advantage over the rest of us because they can see through the crap in that stuff. But if that stuff makes your eyes glaze over, cash flow, I love, or try to look for numbers that accountants can't manipulate, like top line revenue, for example. But the other thing is just read the management discussions. Try to read footnotes. They have to tell you. That's the best thing about the filings. They have to tell you. So if you start reading, you'll start seeing what's repetitive. And I think people can abuse you quite a bit, me too, by manipulating some of that stuff. That's why it's so helpful once research comes out, because research analysts in given industries, they go through all that and they can give you projections. Most of the crap you read on $5 and under is manipulation. But anyway, Edgar, Edgar. All right, I'm going to sign out. Enjoy your football. Enjoy Martin Luther King holiday, and hug your dog and cat. But if your dog lets you, hug him or her. Cheers.